Good morning, everybody. Welcome back to another episode of The Market Open. We are live. It is Tuesday, February 10th. Thank you all for being here on another day for The Market Open. Folks, we got some data this morning, macro data. We're going to get into it. We got a ton of earnings that we'll talk about, a variety of different sectors, whether it's consumer staples, software, utilities, luxury. Ferrari had earnings today, so we'll talk about that. And then after the bell today, we are going to have Robinhood earnings. That is going to be a very big earnings for a lot of people on the channel. So Robinhood will be live, Tanner, myself, and Roy, and we'll be going through those earnings later today. We'll do a little bit of a preview this morning as well. But yeah, we got a lot of earnings this morning. We actually had some TSM January data that came out last night that kind of caught a lot of people off guard in the semiconductor ecosystem. TSM, if it's holding its pre-market move, 2.3%. That is a new all-time high. They grew 20% in sales in January, a number that a lot of people did not expect. This stock's going to open up very close to $2 trillion in market cap. So you got a little bit of a bid for the semis happening right now based on TSM. We'll go deeper into those numbers and see some of the stuff they put up. But on top of that, we have a lot of earnings. We also have retail sales data that came out this morning as well, which isn't the most bullish. Then again, it's also not the most bearish if you take into account what it means for inflation. So we'll talk about that. But that's pretty much what we got today. Some macro data, some earnings, and then, yesterday was a really good day. Maybe not for every stock, but for the broader market. S&P 500 had its second green day in a row after Friday. We ended at about 694. We're at 694.05 in the pre-markets. If we can have 3 green days in a row, NVIDIA broke out to the 190s yesterday. If we can keep that momentum going, if last week only ended up being a little bit of a temper tantrum that the market was having and we're starting to recover, which some of the data is showing based on the tech ETF inflows and single stock ETF or single stock inflows in general from retail, that it does feel like this was actually a healthy rebound and not just a dead cat bounce. And that's going to be really productive as we get into the rest of the week. And hopefully we are setting ourselves up for a pretty decent NVIDIA earnings week come February 27th. And we can have some good numbers to keep the entire market going as well. So let's get into it. Again, thank you everybody for being here. Let's get started. And let's start off with all the big earnings. I see a lot of people talking about them in the chat. A lot of these companies crushed it. A couple of them didn't. But the rest of them seem to be doing what they need to do. So first, let's get into Oscar. That's up 5%. They missed on the top and the bottom. I actually thought this would be down a little bit more based on the earnings that we got, but they missed on the top and bottom, still holding strong. I believe their guidance is what's really exciting to the street. They guided for about, if I'm not wrong, 50% growth in 2026. Correct me if I'm wrong. But although they missed by 35 cents on EPS, or 35% on EPS and 10% on revenue, the guide was pretty damn good. And as a result of that guide, they are getting the 5% bump. Again, the ACA subsidies, although that might not be the entire story, I still think that's a big part of the story. And that might take some time before we get updates on that. But that is one of the things that has held the stock down. Yeah, they crushed on guidance. That's what I thought. 50% growth on guidance. That's the headline that I saw. That's not easy to do. So the fact that they did that was pretty good. Real quick, before we get into the rest of the earnings, let me just show you guys the retail sales data. So Street thought we would go up 0.4%. On the forecast, we ended up going 0% in the month of January. So retail sales, again, is the measure of change in the total value of sales at the retail level. This is people shopping at malls and Best Buys and all these different places where you can buy things from retailers. We had a 0% move month over month. Now, the reason this is bearish and bullish, bearish because it's like, okay, maybe the economy is slowing down. If retail sales are literally flat month over month, like that's not necessarily the best thing you want to see. If you want earnings to increase for companies across the retail sector. But the reason it's not bearish, that's the bearish perspective. The reason it's bullish is because inflation. Right now, inflation, if you already think is dead, then it doesn't matter. But if inflation still is a concern, and to the Fed, 2.7% is still kind of a concern, less people spending, potentially because jobs are going down, which is the data we looked at last week, means that there's going to be less inflation in general. Now, that less inflation comes at the cost of less demand for goods and services, which could end up hurting earnings growth, but at least it balances out some level of inflation. It's just 1 month. I don't think you can take away too much from the data, but there is a bullish and bearish perspective to those retail sales. Datadog, they crushed it. 59 cents versus 55 cents expected. They beat by 7% on EPS. Revenue, they beat by 4%. Revenue's up 30% year over year. EPS is up 20% year over year. That stock is, wow, 14% in the pre-market. This is a software name. Oh, sorry, that was December retail sales. I'm sorry, that was December. Yeah, not January. That was it, which is also even makes it worse because it's like December is supposed to be Christmas. That's where everyone's supposed to buy a lot of stuff. So kind of weird that we had a 0% move in the month of December. But even though this is a SaaS name, there you go. You're getting some pretty nice move right there, 14%. Hopefully the rest of these SaaS names can follow through and this whole SaaS Armageddon might be done with. But you're seeing Datadog get some momentum right there. Then you had Spotify. You know, a lot of people like this one. They beat by 60% on EPS. I was going through a little bit of their numbers. I saw their MAU growth. I saw their gross margins that I think are basically at all-time highs at 33%. Operating margins, though, are at 15%. That's the biggest issue with Spotify. But I don't know how they got that 60% beat. I don't know if that's like a tax thing or if they like recognize the gain on an investment. So if someone knows, let me know. But if it's like a legit, they just put up better numbers, then that's a hell of a beat. EPS is up 200% year over year. Revenue is up 22% year over year. Spotify is up 14% in the pre-market. 14% in the pre-market. Salesforce is down again in the pre-market. Salesforce, why is Salesforce down 3%, bro? You would think Datadog would like at least pump some of the bigger software names. Nope. Then we had SP&G Global. They missed by 1% on EPS, beat on revenue in line with expectations. I think the stock actually ended up, 18% down. Last time I saw it, it was like 3% down. That's not the best. Why is it down 18%? Following a lawsuit. You know, the credit rating agencies are going to be vibe coded away anyway. So does it even really matter? Dude, that's a pretty ugly drop. Goodness gracious. SPGI. I'm trying to get the exact headline on this, but revenue again, 430 EPS versus 434. So they missed on EPS. Revenue, they had a slight beat, 3.91 versus 3.9. I guess the street is upset about something. Guidance didn't miss. I think guidance was slightly light, but it definitely didn't miss. They're expecting soft guidance. Price targets are already going down. I see from 638 to 555 from certain banks that are already putting out some of these numbers. Wow, that's ugly. I don't know if a lawsuit is the only reason that this was caused. They've had to deal with many lawsuits throughout the course of the company's trajectory. 18% down. How about Moody's? Moody's is probably getting hit too. Moody's down 10%. Oh my. You know, SPGI is one of those businesses that people think is like just a business you buy and hold forever because it's a solid business. It compounds, yada, yada. It's not supposed to be volatile. I mean, Berkshire has had Moody's as part of their, I think, top 15 for like, what, a couple decades? I guess we're in a different market. Moody's down 10, S&P Global down 18. I'll try to get some more headlines on those, but those stocks are down in the pre-market. Then you had Coca-Cola. They beat by 4% on EPS. They beat by 2%, or they missed by 2% on revenue. Coke is down 3%. Revenue's up 4% year over year. EPS is up 5% year over year. Looks like it was not enough for the street as Coke is down 3%. This stock was actually running a lot last week when tech was selling off, but you're seeing it now start to correct at least a little bit. I believe it's up year to date as well. Coke stock year to date is, up 13%, 12.8%. Then you had Ferrari, missed by 2% on EPS, 255 versus 259. Revenue, 2.14 versus 2.11. Ticker symbol race. They got hit pretty hard back in November. This stock is up 7% though. So getting a little bit more momentum right here. Ferrari is interesting. I think that Ferrari down 9% for the year, but up 7% after hours. So it's kind of 2% down for the year. Obviously, Ferrari appeals to a certain class of consumer that can afford these like high luxury vehicles. And that is the moat that I've heard around Ferrari is that like if you're always going to have an audience that has an excess amount of capital that wants to buy these types of cars, Ferrari is always going to have a customer to sell to. And even if the economy goes down, Ferrari is such a high luxury product that they're not selling to the average person, so they're not that worried about it. I've just never been that compelled to own the business. I mean, like if your entire market is just people who are rich, It's not a horrible business. I don't know. It's never seemed like the most exciting business to me. Then you had CVS Health. They beat by 9% on EPS, 109 versus $1, and then 105 billion versus 103.5. Revenues up 8% year over year. EPS is down 8% year over year. CVS is down 1% in the pre-market. Nothing too crazy. That one going relatively flat. So, I mean, those are the major earnings that we had. Oscar missed on the top and the bottom. Stocks up. Spotify, pretty good earnings. That's up. CVS, that's flat. Ferrari, that's up a little bit. Coca-Cola down 3. Datadog, great earnings in the software space. That's up 13% or 14%. S&P Global, still don't know why exactly that's down 18, but that's down 18 off a miss on EPS. And you had a beat on revenue. And then again, we had the retail sales data, which was a bit disappointing. But hopefully it wasn't, that bad about hopefully they didn't signal something that was necessarily bad about the economy just because retail sales were flat in the month of December. S&P 500 up in the pre-market. Taiwan Semi, that's up 2.3. I think really that's the story of the morning. They put out their January sales numbers, and my goodness, it was pretty freaking incredible. January sales are up 37% year over year to 12.7 billion. I mean, it's pretty damn incredible the amount of money that these guys are putting up and the types of revenues that they are putting up. But if you look at these monthly net revenues, it's just unbelievable. And I think that is helping the overall ecosystem of semis today. I wouldn't be surprised if we see an ASML or an NVIDIA pump up just on those TSM numbers as that one continues to go higher. Amcor had earnings yesterday. We already covered it on the show yesterday. They beat on the top and the bottom. Stock's not giving you a good reaction right here because it ran up 7% during the day. So that's why I don't think you can expect too much from Amcor. Now, if Amcor opens up and gaps up to like 55, 56, it would not be unexpected. It tried to do that last night. I think there were just too many sellers. So it's not crazy to see that happen. I don't think it's necessarily going to gap down back into like the 45 range. I could see it going back to like 50 or 49. The big thing on Amcor is they beat on their margins, 13.5%, and they beat on the Q1 expected EPS guidance. So they are crushing it on every level that matters. It's just, stock's up 25% year to date. So if this stock was at like $40 yesterday, I think it would have had a major gap up, but people ended up buying it into the print. And that's why it was up 7%. Nebius is tomorrow, so we're not covering Nebius. Did Fiserv have earnings today? Fiserv is down 5%. I don't think they had earnings today, but maybe I'm wrong. Fiserv, no, they did have earnings today. Okay, adjusted revenue was flat at 4.9 billion. Fiscal year increased 4% year over year to 19.8 billion. CEO says during the fourth quarter, which marked the first full quarter executing the One Fiserv plan, the team took decisive steps and achieved several meaningful milestones and client wins. Our fourth quarter results in 2026 guidance are in line with what we outlined in October. Okay, Fiserv down about 5%. Looks like they beat on the top and the bottom. Street still isn't happy with it. This is the stock that fell from like 120 to 60 last November, right? Yeah, 127. It fell to 44 at the lows, but 127 basically to 60. This was back in early November. The payment space, obviously with PayPal, has just not been the best. And you've not really seen a lot of momentum. Even companies like Affirm that have absolutely crushed it. Oh, sorry, Nebius is Thursday. Nebius is Thursday, you're right. For some reason, I keep thinking today is Wednesday. I have to remind myself today is Tuesday. But yeah, Nebius is Thursday. And so we will have those earnings early in the morning. And then again, Oscar, they guided for 50% revenue growth, which is really good. Stock's up 2.3%, but they did miss on the top and the bottom on EPS and revenue. And that's why that stock is probably flattish here in the pre-market. So those are the main earnings. Those are the main earnings that we had. Overall, pretty good earnings. Nothing too crazy. The broader thesis of the market seems to be intact with some of these earnings. We're not seeing like dramatic misses in certain sectors. And as a result, I think we are getting more momentum. Grab is tomorrow after the bell. Grab is not today. Today after the bell, we have Hood, A-Lab, Cloudflare, Lyft, Upstart, Ford, Centrus Energy, and Zillow. And obviously the stream today is going to be dedicated to Hood, but we're going to have an hour before the call. So we will be going through all the numbers of all these other companies. But we will be streaming the Hood call later today. And that will be happening around 3:45 p.m. Eastern. Okay, so this has been going viral over the weekend. Trump does not see the clickbaiting accounts have to. I mean, I want to say something has to be done about it, but nothing can be done about it because it's just, this is the internet. Trump did not say he regrets picking Kevin Warsh. Trump said he regrets picking Jerome Powell. So these accounts that have gone super viral saying Trump regrets that he picked Kevin Warsh. It's like, no, he was talking about Jerome Powell. This is the clip that people are talking about in an interview yesterday. You're speaking about Powell. Now, if he was speaking about Kevin Warsh and maybe we're getting a new Fed chair, that might not be the most bearish. But yeah, he was not talking about Kevin Warsh.
When did you, in your heart and mind, when did you know you wanted Kevin Warsh?
So
officially, it was 2 Fridays ago. But when did you?
Well,
really
I made
know?
a mistake. He was runner-up, if you want to say that.
He was a finalist.
Yeah, he was, and I made a mistake because I had somebody that was my Secretary of the Treasury, wanted him so badly, and I didn't feel good about him. But sometimes you listen to people, and it was a mistake. It was really a big mistake. But I think we're going to.
The previous question that was asked was around Jerome Powell and how he messed up with picking Jerome Powell, because obviously Jerome Powell didn't end up being the dub that he wanted. So Trump's kind of answering the previous question after the guy said Kevin Warsh. So now everyone's saying he made a mistake. But people have to be logical. Why would Trump go on national television and say, yeah, I made a mistake about Kevin Warsh? Like, that doesn't make any sense, right? Like, if he actually made a mistake, he would, first of all, he would never admit he made a mistake. Second of all, he would just withdraw his nomination, and then boom, you would have someone else there. So, Trump was talking about the second question in the context of the first question. So no, he did not say he regrets Kevin Warsh. I think he really wants Kevin Warsh based on everything else he said. But he does regret Jay Powell because he did pick Jay Powell back in 2017. Now, there is a world where Kevin Warsh ends up acting like Jay Powell to an extent. If things get out of hand with inflation, because he's definitely an inflation hawk. But if inflation's dying and AI is super deflationary, then I think that's why Trump thinks that Kevin Warsh is going to be pretty good. Here's the other thing that Trump said about Kevin Warsh last night as well.
You in your
I didn't feel good about him. But sometimes you listen to people, and it was a mistake. It was really a big mistake. But I think we're going to do something that's really spectacular. We should be at 15%. I'll tell you, if our new head of the Fed, who I think is going to be great, and he's a really high quality person, but if he does the job that he's capable, we can grow at 15%. I think more than that.
When did you,
So as you can see, I mean, he's pretty excited for the head of the Fed, and hopefully that head of the Fed is going to be relatively decent when it comes to monetary policy. We got a couple of other things going on. This is Peter Navarro. We haven't seen in a minute. He was live this morning as well.
The Dow had fallen to 38,000, and this was right around the time President Trump had announced the reciprocal tariffs, and Wall Street was in a panic. And what I said to you is that relax, it's going to 50,000. And the reason I said that is simply because Wall Street and Jay Powell do not understand how the Trump policies can actually stimulate non-inflationary, robust growth and rising real wages without a wage price spiral.
So the administration right here kind of taking a victory lap with Dow 50,000. Again, yesterday, Trump said he thinks the Dow can be 100,000 by the end of his term, which obviously would be kind of crazy. I don't know if that actually would play out, but I mean, if it does, obviously the S&P and tech stocks probably will do well over the course of that time. This was Trade Representative Jameson Greer and what he said about the new mineral agreement that was announced last week as well.
The Trump administration is taking a whole of government approach. My office, the Office of the U.S. Trade Representative, we're working in tandem with the Commerce Department, the Energy Department, the War Department, the State Department, the National Security Council, and others to align other countries with our policy of diversifying our critical mineral supply, which includes rare earths. So over the past 6 months, all these agencies have worked together with many partner countries to sign memorandums of understanding about having access to minerals in each other's countries, about working together to invest in processing and downstream manufacturing. And now we're starting to negotiate an agreement on trading critical minerals, which will talk about things like establishing price floors on a mineral-specific basis, phasing these in as appropriate, agreeing to investment rules about ensuring mutual access, talking about how to have offtake agreements and financing and public-private partnerships. Again, it's a whole-of-government approach and has to touch on each of these elements to make it economic to make and produce critical minerals in the U.S. And
all those critical mineral stocks, by the way, caught a bid yesterday. I mean, again, that has been a crowded trade. It's done well if you've been able to time it right, but there would be random days where CRML or MP end up just tanking, right? They were up 9 to 10% yesterday, but CRML was pushing $20. Wasn't it pushing $25? It was pushing a heavy number. Yeah, it was pushing 22, 2 weeks ago. So now it's at 12. It's been cut in half, but obviously if you got in at the right time, it's been making some more momentum. So the critical minerals trade is still a good trade if you understand the timing of it, but it's definitely been backed by the United States. You had that $1.6 billion investment for CRML, and then obviously MP got the DOD investment, which is also really important. That one is down in the pre-market. Paramount enhances its superior $30 per share all cash offer for Warner Bros. Discovery and provides an update on the regulatory process. These guys are not going out without a fight. It's kind of getting embarrassing at this point because Warner Bros. Has said time and time again they do not want to sell to Paramount. Warner Bros. Right there, $27.97. That's up 3%. There's still an arbitrage here if this thing gets bought out at 30 and the stock's at 27. Netflix, again, bounced really nicely yesterday from those 79 lows back up at $82 in the pre-market. The street is not letting it go down at this $80 level that you're seeing get hit. 82.20 right here on Netflix as Paramount continues to try to make their bid even better. Let's talk about the bond market. So the 10-year is actually coming down a little bit, which is really nice. We haven't seen 4.15. Honestly, in the past couple of weeks, it's been stuck at 4.2. So it is nice to see people buying up some bonds. It's not the worst thing in the world. TLT is starting to get a lot of volume as well. Again, TLT goes up as yields come down. TLT up about 1% in the pre-market. This asset has been kind of stuck at the same place for the past year. As you can see, it's down about 1% over the past year. A lot of people thought last year that bond yields would come down significantly, at least in the 10-year, which would allow TLT to make a move. Unfortunately, that didn't happen. Yields actually ended up elevating towards the end of the year and early in January. So, I mean, TLT I still think is a relatively decent hedge if Trump gets the market to recognize that inflation shouldn't be the biggest concern and that, well, at the end of the day, Warsh ends up lowering rates. If that doesn't happen, then obviously TLT is going to go nowhere. But I don't think it's a horrible trade. Like, if yields don't come down this year, I mean, I guess they're just not coming down for a while, and the TLT will continue to be stuck. Options on TLT probably isn't the best because you're just not sure when those yields will come down. But remember, TLT back in freaking 2020 was at like $150. Doesn't need to go to 150 when bond, the 10-year was basically giving you like 1%. But 10-year gets down to 3.8, 3.7. TLT gaps up to like 95, 97. That's still a pretty good trade. And that hedges against any weakness in the economy if rates continue to come down and yields continue to come down. Salesforce right there, that's down about 2%. Again, Datadog, that's up 12.9. S&P, that's up a little bit. And then TSM, great earnings or great January data, that's up 2.49% in the pre-markets as well. Michael Burry tweeted some TA yesterday about Palantir. As you can see, he says, I'm working on something Palantir, and then he's posting left shoulder, right shoulder, support, head and shoulders, TA. I think the only reason he's posting it is because Palantir started to recover post the decline with the entire market last week. Again, I don't really think Palantir can get down to his $50 target if the market doesn't collapse with it. Like, I really, like, the only way Palantir gets to 50 and like has some epic collapse and the market stays stable is if Palantir messes up on earnings. And I don't know if Michael Burry saw the last earnings, but they are guiding for 60% growth. They're going to grow 74% in Q1, and those numbers are conservative. So it's not going to be because of their earnings growth. It is going to be because the market does not want to pay a premium, not just for Palantir, but for every company that's getting a pretty big premium, which is what we saw happen last week, which is why Hood, Rocket Lab, Palantir, all of them got smashed. But this is one of those markets where things move together. I mean, you don't really see divergence unless a company specifically has a reason to diverge. And so for him to be so obsessed with a head and shoulders on Palantir, again, I just don't think it comes to fruition until the entire market falls down. So yeah, I guess he could be working on something for Palantir, but I don't think the TA is going to matter unless the entire market gets hit. And, you know, we got hit pretty bad. Dude, Palantir fell from 180 to 125 last week. Not in 1 week, but throughout the year to date, right? Like, it was ugly. Rocket Lab fell from 99 to 61. Like, we had some pretty ugly drawdowns. And at some point, this also becomes a market where people end up buying the dip like they've always done, which is what we saw last week from this Bank of America survey right here. Tech funds recorded $6 billion in inflows last week, the largest intake in 8 weeks. Now, the data I showed yesterday showed that hedge funds are shorting single stocks at the highest level they've shorted at since 2016. But individual investors are plowing in to stocks. $34.6 billion flowed into stocks last week, alongside $87.2 billion in cash. That was money market funds, and $23 billion in bonds. And as a result, you're seeing some more momentum there. We are not going to have Technical Tuesday today, guys. We got Robinhood earnings. So Jason probably, I talked to him yesterday, is going to come out on Thursday. We're going to have a shortened version of TT on Thursday. We'll go through some of the earnings, but we're not going to listen to any of the calls, and then Jason will hop on. But he's not going to come on today because today we have Hood, but most likely Thursday. He can't do Wednesday because Wednesday just doesn't work for him, but Thursday we'll have at least 2 hours of TT. It'll be Technical Thursday, I guess. And again, Nebius is in the morning on Thursday, so I'm not really going to be covering that because it's going to be super. I mean, we'll cover the results, but I'm not going to be listening to the call because it's a little early. But we will obviously go through the numbers as well. Yes, it is Hood Day with Roy. So thoughts on Hood. Well, I talked about it over the past couple of days. I think it's pretty simple. They're going to beat on earnings. I think they're going to beat on revenue and the core metrics they need to beat on. The only issue here is what guidance, and they don't really give guidance, but like kind of what metrics do they show for January and February to start off the year? Because if those metrics end up being flat to down compared to where it was in October, November, then, you know, maybe the street's not the happiest about it. Having said that, the stock has corrected 40%. So, and 50% from the highs. I really don't think we're going back to $68 like we were at last week. I mean, could I see it go back to 75 if there's like some miss that's like really bad or something? Yeah. But then again, they probably bought back a ton of shares. They're going to beat on EPS. They're going to have 35% revenue growth. They're going to beat all the expectations, even if it's a slight beat. And then as long as they show that Q1 is going in the right direction when it comes to deposits, when it comes to trading volumes, when it comes to prediction markets should be crushing it. We had over 500 million contracts for the Super Bowl traded. Then I think they're going to be okay. The point is, I think a lot of it has been de-risked. Now, again, we're in a dicey situation because crypto is relatively flat. And so maybe they say, hey, crypto is affecting certain parts of the business. I think, again, some of it can be made up for. But I just don't think the stock has to go back below $80. Could it happen? Of course. I don't think it needs to today. Now, do I see the stock making a move up to 95, 96? I mean, there is a world where, I mean, it got hit pretty bad. It's trading at one of the lowest PEs it's traded at in over 3 years. And at 70, it was trading at like almost below a 25 PE, which for their growth is just insanity. So I don't think it's crazy to expect to move higher. I'm not expecting it. I'd be very happy if we can just stabilize because I don't want to go back to the 70s. But I did buy back all my calls yesterday. So all my shares are naked. I have no $100 covered calls on them. And now we just got to see if they can deliver some good earnings. But that will be happening after the bell. Spotify, are we still moving higher? Spotty is up 12% pre-market. Again, they did beat on the top and the bottom, which is also really good. Kevin Warsh is not out as the Fed chair. Again, please don't believe every Twitter headline you see. Trump was talking about J-Powell when he said he regrets him. He did. Again, why would he go on national television and say he regrets picking the guy he just picked? You guys know Trump's ego. He's not going to say he regrets anything or makes a mistake. He doesn't say that stuff. Also, if he were to do that, he would get rid of Warsh first, make a Truth Social post, and then talk about why he's picking Rick Reeder or something. So no, Kevin Warsh is still the nominee for the Fed chair. That's not changing. And also, I think markets are coming to agree with it. Like the bond market's going to be happy that he's not printing a ton of money via quantitative easing, even if Bitcoin and gold don't like that. And the equity markets are going to like that he gets inflation under control. So, I mean, as hawkish as he might be, it might end up being relatively reasonable for the markets to accept him as the next Fed chair. Gold right there, that's up a little bit, 0.26%. Silver is down 0.36% as well. Yeah, S&P Global, dude, I still don't see the headline for why this thing is getting hit. 18% feels a little ugly on a company that's like never supposed to move this much. So I'm not sure why that's down, but that is down pretty badly. SPGI again. There you go. That's down about 15%. All right, let's talk about some of the other headlines. Oh, yeah, let's get into this. Saylor, I know a lot of people are wondering what the hell is going to happen with MicroStrategy as Bitcoin is now below their cost basis. Here's what he had to say this morning.
And given that that Bitcoin has sort of done a round trip since the beginning of this administration, that we are now finally getting to some kind of price discovery moment that's fundamentally different. That in the past, Bitcoin, because it wasn't in ETFs, because it wasn't as broad-based, that there wasn't the kind of price discovery that's now available today. And maybe these prices are more realistic than what had been the case before.
Well, there's no doubt the asset is seasoning, and that's a good thing. We just had an all-time high, Andrew, 4 months ago, October 6th, I believe. So if you've got a time horizon of less than 4 years, you're not really a capital investor, you're a trader. And the traders are having a field day with the volatility, good for them. But the capital investors are looking out 4 years. And if you look at a 4-year time frame, Bitcoin is 2 to 3x the performance of the alternative capital assets. And anything built on Bitcoin over a 4-year or more time frame is going to outperform for the same reason.
The concern, as you know, about strategy itself, to the extent that there are worries within the Bitcoin community, is that, you know, if Bitcoin continues to fall, and I know you've made the argument that you have enough cash on hand to handle this for the next 2 years, that there could be a moment at which you have to sell, not buy.
Yeah, that's an unfounded concern. The truth is our net leverage ratio is half the typical investment grade company. We've got 50 years worth of dividends in Bitcoin. We've got 2.5 years worth of dividends just in cash on our balance sheet. So we're not going to be selling. We're going to be buying Bitcoin. I expect we'll be buying Bitcoin every quarter forever.
Just so we all understand, what is the price at which this story gets much more complicated for you and therefore the rest of the Bitcoin community? I think there's a sense that given how large a player you are, if the price of Bitcoin were to fall to a place and continue to stay there for 2.5 years from now, and you were forced into a selling position, that unto itself could create a cascading problem.
Andrew, if Bitcoin falls 90% for the next 4 years, we'll refinance the debt.
Refinance where, Michael?
Does anyone believe that? Like, could it actually fall 90% and they get away with it?
We'll just roll it forward. I mean, again.
But yeah. you think banks would lend to you at that point?
Yeah, because the volatility of Bitcoin is such that there's always going to be value. Look, you're at 68,000 right now. Literally has to fall to 8,000. Then we just refinance the debt. If you think it's going to zero, then we'll deal with that. But I don't think it's going to zero, and I don't think it's going to 8,000 either. But the credit risk is de minimis at this point.
I guess the bigger question is, I know you have a stock of cash that you can use to continue to pay out the dividends and beyond. How long does that carry you through?
2.5 years, Becky.
I thought you had some.
We've got 2.5 years of cash. We wouldn't have to raise any money.
Okay, so that includes the debt. That includes the debt due next year as well.
We have 2.5 years of dividend coverage and debt coverage in cash. We raised $4 billion this year so far. We raised $25 billion last year. There isn't credit risk to the company. The story here is that the digital credit, STRC, is the most popular credit instrument of the decade. It's trading 100 times as much as traditional preferred stocks. and it generates 2 to 4 times the cash flow of any other fixed income instrument. So that's the revolution taking place. There isn't any credit risk in the balance sheet of the company.
Why do you think the stock's down 60% over the last year?
The company's engineered to be amplified Bitcoin. So when Bitcoin goes up, we go up faster. When Bitcoin falls, our volatility is higher. We've created an asset that's got an 80 vol. And so the stock falls because Bitcoin's been in a bear market for the past 4 months. It's been an extreme drawdown. But at the same time, the other day we had a 25% increase in the stock price in a single day. Our stock is more liquid, on a market cap basis than any of the Mag 7 stocks by a factor of 2, 3, 4. The open interest is the greatest open interest of any of the major stocks in the market. So that volatility creates interest, creates liquidity, creates the opportunity for us to issue the digital credit.
To dumb down what he's saying right here, because I went through my Michael Saylor MicroStrategy rabbit hole a year ago. Actually, this was early 2024, so almost 2 years ago. His argument here is that the reason people like MicroStrategy is because it's volatile. That's why he makes this argument that volatility is vitality. Like you get life through the volatility. And, why do you pay 25 times for Microsoft's earnings? Because you believe that 25 to 30 times is a reasonable multiple to pay on top of their earnings to get access to LinkedIn and Activision Blizzard and Copilot, maybe not Copilot, but all the stuff that makes Microsoft amazing. So for Saylor, he's like, why do you pay I think at the top, it was like 2.5 or something, 2.7 times MNAV. Why do you pay that premium to the net asset value? Why do you pay 200% above what they're actually owning on the balance sheet when it comes to NAV? Because of the volatility. The volatility of a MicroStrategy, the ability to engage, particularly in the derivatives market, options, selling them, buying them, puts, calls, etc., all back and forth. That is what creates the liquidity that excites people to trade. And essentially, he admitted that the purpose of the stock is for people to buy and sell it, which is different from Microsoft. The purpose of Microsoft is to own a company that has cash flows and that's growing, yada. So that's why you're paying this 25, 30 times multiple. You're paying a premium for something that you believe is doing something in the world that is important for society in some capacity. For MSTR, you're literally buying and selling it to buy and sell it. Because the volatility, literally the thing going up and down, is the thesis of owning the stock, which is not a horrible thesis if you believe that Bitcoin's going to keep going up and you're long, or you're short and Bitcoin's going to keep going down, because then you have this like extenuated exposure to Bitcoin. That's why he says we are like the magnified exposure that people want to Bitcoin. But that really is the point. Exactly. It's a trading vehicle. And I think that makes sense. I just personally am like, well, why exactly do I just want to be part of a trading vehicle? One of the reasons I like BMNR is because I think there is real use cases for Ethereum in the financial ecosystem that we have talked about for months now, and BMNR is a way to get exposure to that new financial system that's being created. For Bitcoin, I don't think a lot of people see it as a new financial system. They see it as a real store of value, and that's a perfectly fine assumption to have. And that store of value is a hedge against the debasement of fiat currencies. The problem is, we've said it over and over again this year, but gold has actually been the hedge, not digital gold. And so I think with strategy, I think he's going to be fine with the debt. Now, I don't really believe him that if Bitcoin goes down 90%, he's going to just be able to roll it over. His argument is, well, the banks will expect it to one day go up, so they're going to be fine with refinancing the debt. But after a 90% drawdown and Bitcoin's at 8,000, I don't know how many banks are going to feel so optimistic. Yeah, Bitcoin's definitely going to come back, even if it probably will. And I guess that's the broader argument that he's making around BTC. Regardless, I don't think Bitcoin's collapsing. So hopefully this 60,000 was the bottom. Maybe it's not. But if it was, then maybe that's the worst that MicroStrategy has to see going into this year. It's just hard to say that anything is bottom because it's only February. We're not in the middle of the year. We're like so early in the year. Anything could happen for the next 10 months. But hopefully this is the worst of that volatility. Speaking of gold and silver, Bank of America says sell the crap out of it. Bank of America added U.S. material stocks to its list of assets showing bubble-like behavior alongside gold, silver. Using its new bubble risk indicator, Bank of America says client interest is strong and will now publish weekly updates highlighting frothy areas. The bank warns that AI-driven innovation could fuel more unstable bubble-prone markets. And they're saying there's unusually high return dispersion in European stocks, especially tech and basic resources. Basically, they're saying the commodities should not be acting the way that they're acting, and the material stocks, your rare earth stocks, etc. And as a result, you should think twice about owning them. Now, again, people have been calling gold and silver a bubble for the past year now, and they've only gone up. I do think that Friday reversal, gold and silver have not gotten back to those levels of 2 weeks ago. Gold was at 5,500, silver was at 100, I think 25 an ounce. I don't know if they get back there, but so far that has been the top. And, maybe we get back above it. But Kevin Warsh, if he's serious about quantitative tightening, then, maybe it's not as easy for those to go higher. Is Nebius moving? Nebius is up. Nebius agreed to acquire Tevili, a company that develops software to help AI agents search for up-to-date information needing for tasks like coding and financial trading. This is why I like Nebius. Because outside of the other AI HPC plays, they are actually diversifying themselves. They're building their own cloud, and they have a lot of stakes in a lot of companies in this AI ecosystem. Stock's not moving crazy off that news, but new acquisition for Nebius. I don't have the price on that acquisition. Tevili is the company they're buying. 93.04. That stock was up 8% yesterday. Oh, 275 million. Oh, that's not too bad. 275 million. I mean, they have equity stakes that are worth much more than that. Now, again, Nebius is not profitable. I think that's the biggest thing for a lot of these AI HPC plays. They're focusing on growth over profitability, but they can start to show a path to profitability over the coming years while, potentially growing 300 million to 7 billion in ARR. And that is something I think the street will be happy about. Roman said it's going to be building a comprehensive offering, and LLMs are quite powerful to talk to about different stuff, but then you also need to understand what's going on in real time, and this will help agentic workflows for Nebius's broader range of services. All right, not too bad for Nebius. A couple other headlines before we get into the bell. We got 2 minutes. Mark Zuckerberg bought a $200 million house in Florida. It looks like he's moving, and the exodus of billionaires from California are leaving. It is not official that he has officially moved yet, but I don't know if he's buying a $200 million house in South Florida for the hell of it. So you are seeing more and more people in the California ecosystem leave to... Larry Page, I think, already left a couple weeks ago. Peter Thiel left. A lot of people just do not want to pay this billionaire tax. And the other big news we had right here, Samsung and NVIDIA are building an AI factory to drive intelligent manufacturing innovation worldwide. Through this collaboration, Samsung and NVIDIA aim to establish global standards for AI-based large-scale semiconductor manufacturing and enhance operational efficiency. So we had a new partnership here with Samsung and NVIDIA this morning. The headline yesterday that messed up Micron was that Samsung is producing more HBM memory, and so some of the memory stocks got hit off that. But today, Samsung and NVIDIA are going to be collaborating as well. And again, Nebius acquiring that company. We'll see if the market reacts to it in the next 20 seconds. But you have that one headline there. We'll see how these earnings do. See if some of these can recover. And overall, it's time to see if we can have a third green day after a rough week last week, and if we can keep some of this momentum going. All right, February 10th, Tuesday. Thank you, everybody, for being here at 9:30 a.m. The stock market is once again open. All right, wake your ass up. S&P 695.30. We are going green as soon as we open. Hopefully, we can hold on. We did hit 696 yesterday. 695.50 as we get into the open. S&P Global was down 18%. Now it's down 6%. So that's good. It's not the best to see these large legacy companies fall that much. So looks like that dip got bought pretty quickly as we get into the bell. Spotify, 13% up. They crushed earnings. They're getting some momentum. Robinhood goes red, down about 1%. I actually would like Robinhood to be stable going into earnings. I do not want to see it gap up before the print. Staying around this price, even if it's down a little bit more from here, I think is reasonable. And then if we can get a good print, hopefully we can make a move higher. Netflix, 83.24. That's up 2.2%. Warner Brothers, that's up 1.84%. MP, that's down 1%. Critical Metals, that's also down 1% as well. Amcor, again, great earnings. Stock just ran up a lot during the day, which is why I think you're getting a relatively muted reaction right here. But the long-term thesis on Amcor is set in place, and they were executing very well from a margin perspective and from a guidance perspective on EPS. Fiserv was red 5%. Now it's up 1.6% after earnings. Not too bad. Ferrari, That's up 7%. That is green. Estee Lauder, that is flat on the day. Shopify, look at that, 6%. I think they have earnings tomorrow, if I'm not wrong. So Shopify will have earnings soon. 125, that's up 5.6%. AMD, 218, that's up 1%. Again, I did initiate an AMD position at 208 last week. I still think, I think below 250, or at least below 240 is not a crazy price for this, but getting to the low 200s was a bit ridiculous after the earnings. It's not like, speculation before that. We saw the earnings. The earnings were amazing, beat by 16%, and still it fell $20. So 217 right there. That's up about 0.5%. And it should be going up because NVIDIA as well, breaking back up to 193. NVIDIA and AMD both getting some momentum right here. Intel's down 0.5%. Copex is down 1%. Air Test Systems down 1%. Google, 319. Google, again, raised a ton of money in the bond market. It was oversubscribed by 20x. So people were begging Google to take their money to buy their bonds. So they don't really have a problem raising money because people don't expect Google to go out of business. But that stock down about 1.3%. Tessie gets some green. 423 on Tesla. Nebius, that's up another 2%. Looks like Street likes the acquisition. Oscar is up 10%. Not too bad. Again, they guided for 50% revenue growth for 2026, which is pretty damn bullish. So although they missed on the top and the bottom on this EPS, the guidance was enough to get the Street excited. That stock up 10.5% on the day. How about UNH? Is that one running? UNH also flat. Molina had a bad week last week. That one's also flat to down. NVIDIA 191, Shopify 123. Where is Palantir? Are we hitting 145, 145.30? This thing was at 125 last week, so this one's starting to show a decent level of recovery. Rocket Lab 74. Again, this thing was 61. So the fact that it's 74 is nice to see. Zeta, we are 1740, 1742. This thing got to 1455. Again, I really do think Zeta's going to have a good earnings. And hopefully if the SaaS stench is taking off a lot of these names, then they can get some more momentum. Amcor down about 1.2. CVS flat. They had a good earnings. Salesforce, that one's about to go green. Datadog, that's up 10%. That deserves some momentum. Grabby Grab, we got earnings tomorrow for 31. That's up 1.29. Again, I'll say what I said yesterday. Grab's got to deliver some big boy numbers. It's time to, put up or shut up. And so if they don't put up big boy numbers, I can understand people being annoyed with the story and saying I'm out. I get it. But they've got to actually put up numbers that instills confidence. And if they don't, they're going to get treated the way a lot of stocks have been getting treated if they don't put up the right growth numbers. So tomorrow night, we're going to have to see if they can actually guide for meaningful growth that gets the Street excited. Again, I still think it's undervalued, even if they aren't growing like crazy, just because of how much the stock has been hit. But it's just not in one of those sectors that's hot. It's not in data centers. It's not in AI. It's not in space. It's a super app that I think there's a long-term thesis on. But for them to move in this market, they need to put up real growth. And tomorrow, hopefully, we can see some of that momentum. Datadog, that's up 10%. TSM, $1.9 trillion company. $1.9 trillion company as this one continues to go green. That's all-time highs for TSM. Amazon, 208.86. That one is also flat as well. SoFi, what are we at on SoFi? 21.36. This one, I thought it would break through at 21.50 and stay above it, but it hasn't been able to do that. SoFi still is kind of stuck in that range. Robinhood, green, 86.87. 86.87. Where is Micron? That stock is down second day in a row, folks. That Samsung headline really messed them up yesterday. And again, the headline was really simple. The headline was just, hey, Samsung's creating more factories to build out more HBM capacity for Vera Rubin. And that was enough to get the Street to be like, well, is there that much of a shortage? Which there is. Don't get me wrong. There's a massive shortage in memory. That's why Samsung's creating all this stuff. But any fears of that shortage not being real, and I think that affects these names even from a narrative perspective. SanDisk is also, SanDisk down 3% today. You haven't had a lot of days where the memory names go 2% red back to back. I would not be surprised if this flips green because there's plenty of buyers on this one. They could also be consolidating. That's fair. They could also be consolidating. I mean, they have had a pretty epic run so far this year. How about Uber? Uber is 74. That's up about 1% on the day. HIMS is at 1930. So if you bought the dip yesterday around 16-17, you are up a couple bucks, which is not too bad. But 1930, that stock trying to get a little bit more of a footing. I mean, either it's bottoming here or this thing is going below 15. It's a $4 billion company, so I don't know if it's really revisiting those types of lows. The question is, if you buy it at 19, can you ride it back up to like 2023? And I don't know, maybe you can, but obviously the sentiment on the stock has been hit pretty bad. Open Door 498. Celsius got hit yesterday. That's down 5%. Adobe finally getting some green. That's still at 2022 levels, 268. Applied Digital, that's up 3.4% of the day. Cypher's up 3% of the day. How about AppLovin? AppLovin is 474. That's up 3% on the day. That stock was at 350 or 360 last week. I think it was 375, but it got hit pretty at 360. Yeah, 360 last week. Now up to 475. Zeta, are we getting a move? Getting a little bit of a move, up 2.3. Robbing it again, 86.70. Then SoFi back above 21.50. Google still getting hit. Yeah, the Mag 7. I saw a chart yesterday. I don't know if it's true anymore because Google is now taking a hit. But Google's the only Mag 7 that's up year to date. It's kind of crazy, right? Google's the only Mag 7. Well, NVIDIA now that it's above 190. But every other one is basically flat. Actually, Meta made it a little bit of a move yesterday, so that's why we're getting some momentum. So Google, Meta, and NVIDIA are the only ones that are up year to date. Meta's up 4%. Google and NVIDIA are up 1%. And everything else has been hit pretty bad. Microsoft, bought Microsoft at 413. It's at 415. Let me know in the chat who's buying this one. I don't know, man. Trading at 22 times forward just feels like this one coming back is not going to be crazy to expect. Then again, Microsoft has that OpenAI stench on it. And look, their RPO, 50% of it being OpenAI. I don't think it's the biggest deal in the world. SanDisk now down 5%. But I mean, if you get any bad OpenAI headlines, the streets, I don't think going to be the happiest about it. But they're projecting $620 billion in RPO or something like that's a really big number if they can even execute 50 to 60% of that. So I don't know. I still think Microsoft here is, it's way cheaper than Google, even if Google is a bit more quality in terms of the growth that they're putting up on cloud. Datadog, that's still up 10%. Salesforce goes flat. IGV, 85.67. Bought Microsoft at 399, sold Microsoft at 465. Microsoft is crazy free cash flow. I agree with that. And they're still growing 17%. It's not like they're not growing. And at their scale, it's pretty incredible. S&P 694. That one's slightly flat. VG, that one broke out yesterday. 1006, still holding the $10 range. Broke out yesterday to 1024. Again, it was stuck at the $9 range for the past 2 weeks, so got a little bit of a move. Google still down 2% right here. I guess the street doesn't like the bond offering, which is silly because they're going to use that money to do what they need to do. By the way, Stripe is in talks to raise at $140 billion valuation. And if you look at Adyen's valuation, which is also in the payment space, obviously not as big as Stripe, it's worth $37 billion. I don't know if Stripe deserves a 6x premium to some of these other companies. I like $140 billion. I thought $90 billion was aggressive for Stripe. Now the bankers are trying to give it $140 billion. I just think that's a very heavy premium, and they're obviously looking for exit liquidity from the public markets. Again, Stripe's been private for the past 10 years. So I'm not liking the private valuations at all. And eventually they're going to have to go public, and then we're just going to see if the public markets can make them reasonable enough to bet on. UiPath, that's also flat on the day. S&P again, 694.37. Again, Nebius, they're buying that company for $275 million. We talked about that. Nebius right there, 93.71. Iran, are we pushing through 45? 46.78. That stock was at 30 last week. So again, that one has made a pretty damn good move as well. I think that could happen with Nebius. I think Nebius could drop in an ugly fashion on earnings for whatever reason, and that would just be a buy the dip. I mean, it could be an exact replica of Iran. But I think Nebius is going to have some pretty good numbers as we get into Thursday. Fubo, what about this one? Fubo, 151, that's up 1.35%. Bloom Energy, that one kept going from yesterday. That's down 6% on the day. This one has been one of the most volatile energy names. It's up or down 7% every other day. This one now down 6% for now. I bought Microsoft at 45, so this is not a big deal. Yeah, I mean, if you've been holding Microsoft for a long time, you probably aren't too upset about this. NVIDIA just loses 190. Bitcoin, Bitcoin, that's wow. What is that? 69 to 68 too. That's a $1,200 candle pretty quick on BTC. Hood's probably red because of that. Hood is red, 86.34. As that one's down. USAR is down 2%. The Qs just went red. BMNR went red. Galaxy went red. All right, seeing some more red candles. So Credo, they put out first quarter preliminary revenue. They beat by like 70 million. So that's why that stock was up 10% yesterday after hours after being up 20% during the day, or 10% during the day, 20% after hours. Now it's up 7%. So it gave up a decent chunk of the pump, but still that preliminary revenue was really bullish. And that's why that stock made a move higher. That was also pretty good for A-Lab, which is going to have earnings after the bell. That stock also down 2%. Again, Amcor down 5%. It gapped up pretty heavy yesterday before the print. And so I think you're just seeing people sell it off after it hit 54, 55, 49.82, as that one is now down 5% on the day. Adobe, that's flat. Open Door has earnings next week. Kratos, that's down 3%. Your drone stocks are going down. Lunar's down 3%. ASTS down 5%. Space just took a dump altogether. Rocket Lab down 4%. Oh, we do have the jobs report tomorrow. That's correct. This is the jobs report we were supposed to get last week, the non-farm payrolls, which, again, jobs data has been really ugly over the past couple of weeks. Like, it's just not been good. And, you know, if that non-farm payroll number is not the best tomorrow, that could also not be the best for the street. So that's something definitely we're going to be taking a look at. Let's see. Is there a big candle on the Wix? There is a little one, although it's still red on the day. Rocket Lab 73.40, Robinhood 86.57. IGV, again, software is flat. SMH, that is also down on the day. Let's pull up a couple of these. Yeah, VIX is up now 1.67%. So there you go. 1765 as that goes green. Microsoft, yeah, what would help Microsoft actually making a move today. I mean, we haven't seen an insider buy on Microsoft for a while, right? Like if Satya comes out and actually, you know, he top ticked Microsoft perfectly in 2021. He sold a ton of Microsoft at 350 in 2021, right before everything collapsed. So he's actually been pretty decent on his sales and buys. Yeah, the last time we had a buy on Microsoft was the vice president, April 23rd, $377. The guy bought 3,800 shares. That is the last time we saw a buy on Microsoft. So it wasn't that long ago, about half a year ago. If they come back, I mean, that wouldn't be crazy given this price is not that far away from that average. Reddit, that's up 5%, 149. That's getting a little bit of a move here as well. Some of these software names getting a rebound. Reddit and Shopify both starting to get some more love. Shopify 124, both of those up 5%. Oscar still up 10%. Again, decent guidance for Oscar, and that's what helped. 67% of you guys said green today versus red. I don't think we have any other macro data coming today. Got some banks saying the dollar could drop 10% if the Fed cuts more than expected. They're seeing a 2 to 3% rebound on strong U.S. data, but expect selling of the dollar to resume if the Fed cuts rates. The dollar at 96.65. We are below 97. We were at 98 a week ago. So that one has come down a bit more. As Reddit slightly goes green and Rocket Lab still down 4%. Google, did we lose 315? Did we really? Dude, if we see Google below 300, I mean, I'm not saying I want that to happen, but if we do, it would become one of the more compelling Max 7s. If that multiple takes a breather. Bitcoin potentially getting ready to lose 68 right here. That might also start getting a hit. Why is Google falling? Honestly, let's see if there's any headlines. If it's off the bond sale yesterday, then I think that's a silly reason. Google announces they completed their $20 billion bond sale. Yeah, I guess that's the reason. It was oversubscribed by 20x. So it feels like that shouldn't be the best reason. Here's a good chart right here, though. This is in general why all the Mag 7 are taking a little bit more of a breather. This chart kind of tells you the story here. Big tech is sacrificing buybacks for AI capex. Share repurchases on big tech have declined 74% since the $48 billion collective peak that we saw back in 2021. Amazon has not bought back a single share. They've diluted heavily since Q2 2022. Meta slashed share repurchases to a combined 3.3 billion, down from 33 billion in 2021. And at the same time, Alphabet cut buybacks to 17 billion, nearly half the 30 billion that they spent in the period in 2024. So, I mean, you've got big tech that's obviously going for growth and they're going for capital expenditures over buybacks, which, you know, doesn't help support the stocks if they're not giving them a bid, but it does help support their growth story, which is what I think matters more. Google employees are protesting to partner with the government. Is that actually the reason stock's down? Let's see. Hundreds of Google workers. This is 4 days ago, though. This is an old story. 800 Google workers demand to end any ICE contracts that Google has with the U.S. government. Yeah, I don't know if this is the reason the stock is down, especially because this is kind of old news. Carney says the situation around the bridge that Trump threatened will be sorted out. Carney says he had wide-ranging conversation with Trump. Canada Prime Minister Carney says he talked to Trump this morning. I forgot there was a headline yesterday about a bridge that Trump is upset about with Canada. Apparently they talked this morning, but the exact tweet was, as everyone knows, the country of Canada has treated the U.S. very unfairly over decades. Now things are turning around for the USA and fast. But imagine Canada's building a massive bridge between Ontario and Michigan. They own both the Canada and the United States side, and of course, built it with virtually no U.S. content. Barack Obama stupidly gave them a waiver so they could get around the Buy American Act and not use any American products. And then basically says at the end, we cannot allow this bridge to be built unless Canada pays us. We will start negotiations immediately. Okay, so Bitcoin below 68. It looks like Carney had a conversation this morning with Trump, and they were working on this bridge situation. But he is upset about this Ontario to Michigan bridge that Canada's building. Microsoft getting a little bit of a pump right here, 1.18%. Reddit, 147. Shopify, still up 5%. Bitcoin getting a move down. BTC, and then Ethereum's probably getting hit as well, 67,941. ServiceNow at least getting a bid, 4%. Something after 50% drawdown. And then CRM also getting a little bit of a bid, 1.39%. Nebius, that's down. Again, I don't think the acquisition news would necessarily pump up Nebius. This one just trades with the data center sentiment of the day. Oracle had a massive day yesterday. Oracle at least holding that pump. It was up 9%. That's now up almost 2% on the day. S&P, very close to going red, folks. About 50 cents away from losing it. Again, if we can just stabilize this week, that I think would be the best for all of us. We do not have to go back to the moon anytime soon. Reddit still up 4%. Celsius down again more. Monday.com, that's down 3%. Also Upwork, they had a good earnings, but their guidance sucked. That's down 17%. Another company that a lot of people have been saying AI is just going to commoditize easily. Kind of don't need to hire people to graphic design for you when you have Gemini. And that could be a massive headwind for them as well. Now, it could be a tailwind if a lot of their virtual assistants and people use AI. But if people just do it themselves, then that becomes different. Verizon, how's that one doing? Verizon 47. Verizon's hitting a new 52-week high. Let's pull up the heat map today. Yeah, tech is relatively flat to red. Some of your other parts are getting a little bit of a bid. Honestly, a lot of names, though. If the S&P goes red, a lot of names are probably going to take the hit. Oil prices are flat today. And this is your heat map here. It's choppy. I agree. It's very, very choppy. 100%. Incredibly choppy across the board. But I'd rather have choppy than the straight down that we saw last week. CPI is Friday. So we have some time before CPI. We got retail sales this week, or this morning. Again, retail sales came in at 0%. Street thought it would come in at 0.4, which is weird for December for retail sales to be flat. Like you would think Christmas time retail sales would be up, but they were flat. And then we get non-farm payrolls tomorrow at around 8:30. 47.11 on Verizon. S&P, again, basically still flat. Yeah, the RSP, the equal weighted S&P 500, still moving higher. This one is really done well compared to the S&P this year, which again signals that large cap tech rotation. It's up 5.3% year to date. The S&P is, I think, barely up 1%. And so also small caps. I mean, small caps have still been pretty damn good. IWM is up 7% year to date. In fact, there was some analysis yesterday around the historical correlation with small caps and how they've been doing. 65% of Russell 2000 constituents have exceeded fourth quarter profit expectations so far, the largest since 2021. The Russell is beating the S&P by 6 points, and small caps are seeing their best revisions, Brett, since August, according to Morgan Stanley. So you are getting people that are just leaning into small caps. And again, this has been a crowded trade for a while. I know Tom Lee back in 23 was really, really big on small caps. It didn't end up working out that year. The large caps still dominated, and they ended up dominating for the next 3 years after that. But now, maybe that's where you get a little bit of a breather with large caps. And you're seeing that with IWM massively outperform. Is the 10-year getting hit? Are we actually seeing a decline? Wow. 10-year below 4.15. Huh. Who's buying our debt? Someone is, and at size to get this thing to 5. This thing has been at 4.2 for literally 2 weeks. That's good. That's not bad. Snapchat's up 3%. Meta is coming out with a competitor to Snapchat as per Business Insider yesterday. Now, you might be wondering, wait a second, isn't Instagram the competitor? Yeah, but I guess Meta's coming out with another competitor because Zucks is ruthless. I don't know what's the purpose, though, of a separate Snapchat app, but that's what Business Insider said he's doing. I guess another product to sell more ads. By the way, speaking of Microsoft, look at this chart. This is their lowest next 12 months forward earnings. Last time we saw this, that green line, was 3 times in history. 2017, 2018, and then 2022. We are literally at, theoretically, where Microsoft should bottom at. So I don't think taking a stab at it here is that crazy at all. Like if it goes lower than this, then it's whatever. Like you just have to DCA. But if you're interested in Microsoft, like this is the time where a position at least should be thought of being established. Now, there might be other reasons you don't want to be in Microsoft, but evaluation probably shouldn't be one of them. And hopefully the OpenAI thing is not the biggest issue either. Lutnick says there may only be about 10 emails connecting with him with Epstein over 14 years, Senate Appropriations Committee hearing. Lutnick, I probably had a total of 10 emails with Epstein. I barely had anything to do with Epstein. I did have lunch with Epstein because I was on a boat near his island. Okay. Well, I had nothing to do with him, but I did have lunch because I was on a boat near his island. Oh my gosh, bro. The Epstein stuff is insane, guys. I mean, if you actually, I actually went through more of the files last night. I watched a couple of videos of people dissecting it. It is so bad. It is so freaking bad. S&P 695. Wow, S&P, nice little green candle right there. High of the day. Look at that, 695.60. It's just so bad, dude. Oh, by the way, Palmer Luckey is swearing that Jason Calacanis went to the island, and he literally said, I will never talk about Jason Calacanis again if we have a third party vindicate him on having never gone to the island. But if I'm right, and he did go to the island, Jason has to quit the All In podcast. Palmer Luckey, again, the founder of Anduril. And then David Sachs said, agreed. Like, he is so confident that J. Cal went to the island that he's willing to bet his entire future trajectory of speaking about J. Cal, which, if you know Palmer, you know he loves speaking about J. Cal because he hates the guy, on this idea that he didn't go to the island. Now, I don't know. Well, who's his source? Who has he talked to that is making him so confident that he's publicly saying, I will never talk about this guy again if you guys prove that he didn't go to the island? And I don't know. I mean, if J. Cal went to the island, that would be an absolute lie that he told over the past couple of years, saying that he only emailed with him. But it's kind of crazy. It's pretty freaking crazy. Who is J. Cal? Jason Calacanis. He's the guy on the All In podcast, who is like a big VC investor guy. And he's, he talked a lot of shit about Palmer when he was at Facebook in 2016 because he supported Trump, and, he had a lot of influence in the Silicon Valley world. And he basically was the main reporter that made Palmer seem like a horrible person. And Palmer's had a grudge for a long time, and for good reason. I mean, he basically got him kicked out of Facebook when he was building Oculus. 2174 SoFi right there. That's up 2%. So you're starting to see a lot of these names catch a bid. Amazon just went green. Tesla holding on to its green. UNH went green. Nvidia loses 190. AMD barely holding on to 217. But the S&P is hitting new highs, at least for today, 696. What's moving then? JP Morgan, that's helping out. Eli Lilly, that's not helping out. Bank of America, that's helping. I think it's the financials today that's helping your S&P. XLF is green right there. Also, your value stocks, your Caterpillars of the world, those are green. Walmarts, those are green. Microsoft, definitely. That's at 420 on Microsoft. Not bad. 1.72% right there. Amcor just flipped green. We talked about ARM last week. We talked about ARM earnings. It was good earnings. I mean, they deserve the pump. Now, again, ARM has been a crappy investment for the past couple of years. I mean, SoftBank still owns 90% of it, and they haven't unleashed the float. But it was a good earnings. I mean, they definitely deserve the. I think they're up like $30 from those earnings. I just don't know if it's like more attractive from a growth perspective than any of the other semi. I mean, Broadcom is technically cheaper than ARM, and they're growing way faster. Snowflake, that's pumping as well. It's 4%. All right, software catching a bid. Figma's up 5%. Okay, software coming into a little bit of favor. Let's look at the SaaS names. Yeah, look at that. The only SaaS name that's red is GitLab. Twilio, Intuit, Zscaler, CrowdStrike, Cloudflare, ServiceNow, Adobe. All of those getting some more momentum. By the way, I think I have this video of Netflix up 3%, beautiful bounce off 79. I think I have the video of Lutnick. Yeah, I do. Okay, let's pull this up.
My opening statement, you led people to believe that you had cut off all contact with Jeffrey Epstein after the 2005 encounter you and your wife had in his apartment. But as I'm sure you know, the Epstein files show a very different record of interaction. Why did the Epstein files show you coordinating a meeting and planning a visit with Jeffrey Epstein on his private island in December 2012?
Thank you for the question. I'm glad to be here to make it clear that I met Jeffrey Epstein when I moved to a house next door to him in New York, right? And I met him then. Over the next 14 years, I met him 2 other times that I can recall. 2 times. And that is none for 6 years. So 6 years later, I met him. And then a year and a half after that, I met him, and never again. Probably the total, and you've seen all of these documents, of these millions and millions of documents, there may be 10 emails connecting me with him, probably about 10 emails connecting me with him over a 14-year period. I did not have any relationship with him. I barely had anything to do with that person. Okay.
Secretary Lutnick.
All right. That is Lutnick's claim around this Epstein stuff. I imagine they're going to be, imagine a lot of these other people are going to be in the House Senate committee. They're going to have to testify and talk about what happened in the files. Netflix right there, 84. That's green. Even PayPal's moving today, dude. Look at that. 10 a.m., 30 minutes into this. S&P high of day. SoFi, maybe a move to 22. Zeta, are we breaking 1750? Yep, 1750 on the dot. That's up 3%. And then Caterpillar also up as well. I wonder if the Clintons are going to testify publicly. I mean, they did say they might be open to it last week, which I do think the American people would want to see. Spotify is up 17% as well. Again, UNH, this one took an ugly hit a couple weeks ago after that Wall Street Journal article and the new plan to limit Medicare Advantage rates. 275. This one's been flat. We still don't have the super investor 13Fs, which would tell us if people are buying or selling these companies. I thought we would get it last week. I think we should get it this week. If we don't get it this week, then I would imagine by middle of February we get it, because it's every 45 days. So hopefully we get that soon. U.S. business inventories month over month. November came in at 0.1%, estimated at 0.2%. So that is slightly down. We just got that data on business inventories. Not sure the market cares that much about it. U.S. import price index, December 0.1, expected 0.1. Export price index 0.3, expected 0.1. Okay, so a couple beats, a couple misses here on import and export prices. S&P still moving up, 695. Still moving up. Spotty, who owns Spotify? Put in the chat. Also put in the chat if you took an earnings trade across any of these names today. We had Spotify, we had Coca-Cola, S&P Global, Ferrari. Spotify trying to push 500 again. Spotify was 750 at one point. When did it fall? It fell starting in June of 25. Fell from 767, and then it bottomed literally last week at 412. And so it's making a nice recovery here, but it's still down 24% for the year. I bought 15 spot calls yesterday. What was your strike on those calls? Hopefully you're deep in the money on those. Are you excited about non-farm payrolls? I'm excited if the numbers are good. Hopefully you get some good numbers. Microsoft, she's moving 422. They're not letting her stay down in the 415 range here. If we get some ugly non-farm payrolls, it's not going to be fun, bro. Like, there's a world where non-farm payrolls are bad and the S&P is down 1% tomorrow. Because we don't have the rate cuts. The jobs data is bad. The market is not pricing in any meaningful amount of rate cuts until Warsh comes in. I mean, maybe the jobs data will lead us to get that March cut. But I don't think the market would be happy if it's like a really ugly report. Now, granted, this much momentum to the upside would make you think we have a little bit of a buffer. And even if the report is bad, if it's not horrific, we should be okay. But yeah, we need some relatively decent numbers. The street's expecting 70,000 jobs tomorrow. 70,000 jobs. This is for the month of January. Previous was 50,000. If we can at least come in at around 55 to 60, even if it's lower than 70, but if we come in at like 20,000 jobs, that's not going to be the best. Wow, Disney, they are getting into the bond business. They are selling debt for the first time since 2020. Is Disney building a data center? Why the hell are they how much are they trying to get? They're selling it at a 85 bips comparable to the US 10-year. So they're probably going to give it for around 5% versus 4.15. Why the hell does Disney need to raise money? Disney's not doing anything important. They're not building a data center. Snowflake 185. Can someone tell me why Disney needs to raise money? Yeah, they want to expand goofy enterprises. Like, what the hell is Disney going to do with all this money? I really hate on Disney so much, but I just like, I think this business sucks, dude. The stock's done nothing for 5 years. Leadership has been crappy. I mean, Disney Plus, to me, it hasn't worked. And the parks business, I mean, no one's going to pay a big multiple for roller coasters. Granted, I don't love the content from Disney either. I know for kids it matters, but I don't think my kids' are going to care about Mickey Mouse. I really think Disney has a relevancy problem. ESPN is not that good of a business, dude. That's why, I mean, they had to literally pivot to ESPN Plus just to be able to make some money off it. Linear advertising is going down the drain. Like, when you look at the parts, there's just not an exciting business to me from a growth prospect. I'm not saying they don't have good numbers, free cash flow is not there, but compared to these AI names that are really growing, like, I'd buy Nebius over Disney. And that's probably naive to say, but it's like, dude, Nebius, you could see the growth. Watch Nebius tank 10% tomorrow, but you could see what's happening in front of you. I mean, is Disney really going to grow in any meaningful way? So far, we're pushing 22. I can tell you have no kids. Yes, obviously, but forget the kid art. Even if you have kids, would you buy Disney just because you have kids? Like, you want to hold on to a flat stock just because your kids like Disney Plus, it's still not the best investment. And also, Bob Iger's leaving. And he's the only reason the stock even kind of recovered after Bob Chapek got ousted in 2021. SoFi right there, 2187. Reddit and Shopify, both catching a bid right there. Reddit 7%, 150, 128. Reddit yesterday was trading at 22 times forward. I mean, if you believe they're going to grow, then Reddit yesterday was not super expensive. Reddit at 230 was a bit more aggressive. Hood, we're breaking out. Okay, I like it, but I don't like it. I really don't want some crazy run before earnings because I feel like that's going to set us up for disappointment. That's exactly what happened to Amcor yesterday. Is Hood a buy here? You can't. I mean, before earnings, it's tough. Look, obviously the stock's down from 130, so I don't think it's crazy to nibble here. But before, I mean, what if something goes wrong in earnings, which you don't know? They say deposits were down in January month over month, or trading volumes weren't as high as November. Like, anything they could say, and then the stock or Bitcoin just naturally decides to take a breather over the next couple of days. I mean, you can get Hood cheaper because at this point it's absolutely following Bitcoin. But in general, yeah, I mean, if you believe their growth aspects of 30 to 40% this year, which I think they'll be able to do, and Hood's not trading at some crazy, crazy premium like it was 2 months ago. Can you ask Vlad for some insider info we could use? Dude, people think I have his number, dude. I don't have his number like that. Now, I know someone that can get in contact with him pretty quickly, but I don't have the guy's number. I can't text. I can't be like, good luck today, Vlad. Like, no, I can't say that shit. Also, that's weird. I would never do that. Like, it's a gross, what do you call it? Misappropriation of having someone's phone number. Like, if you have someone's phone number that you're probably not supposed to have, you don't fucking text them. Unless you, like, really have to. So if Robinhood goes down to 50, I'll be sending a text to Vlad. Be like, get this shit up, bro. But until that happens, I'll be okay. Misappropriation is not even a word, isn't it? See, I can't. This is what happens when I try to think of words on the spot. The Coca-Cola CEO, quote from him, our momentum is strong going into 2026. That stock is down 2%. Dude, if I was the Coca-Cola CEO, they wouldn't want me to be the Coca-Cola CEO. The amount of jokes that I would make on that conference call. I mean, in the 1800s, we did have actual Coke in our Coke. Like the amount of shit I would say. I would do it. I'd be like, look, if you guys made me the CEO, like we got to make this stuff exciting. Yes, Nebius is acquiring a company. NASDAQ just went green. Okay, for people asking me about the J. Cole album, I listened to it once. I'm just going to be honest. I didn't like it. I don't hate it. I didn't like it, guys. I'm sorry. I need to listen to it again. But if it's his last body of work, like I thought 2014 Forest Hills Drive was a billion times better than whatever he put out last week. I was not the biggest fan. I'm sorry. I really just wasn't. So for those that care about J. Cole as a rapper, I really thought it was going to be different. So I didn't love it. Diz 39 was better than Diz 29. I agree. Doug says he started a position in Microsoft. Guys, I think Microsoft's the play here. I don't think it's that crazy. Like, do we not think by the end of this year, this thing gets back to at least 450, if not higher? It was at 550 back in June of last year. Maybe they got a little overheated. It was at 480 before the earnings. I don't think this is horrible here. It's based on the raw numbers. We need OpenAI to not screw us. By the way, Kalshi is getting a lot of pushback, bro. These prediction markets, I mean, people are starting to get pretty upset. They're the number 3 app in the entire country. Super Bowl was big for them. But all the feedback I'm seeing around prediction markets, also Robin is getting a lot of shit for advertising that you could bet on the Super Bowl game. Like people are just getting so annoyed that it's showing up in their feed. And look, I get it. Like as much as I love Robin, I think they should have the option to just turn off prediction markets inside of the app. Obviously, that would hurt them in the short term, but long term, that would make all the people that feel uncomfortable with it a lot happier. But you are seeing a lot more people get upset that these prediction markets are getting as much momentum as they're getting. And I understand it. And people are not happy with the culture of it. Google right there. Google still getting smashed today. Down about 2% on the day. Why are they cherry picking that in regard? There's something about gambling that people really hate. I mean, I've noticed that since I've even started talking about prediction markets over the past couple of months, like people really don't like the culture of gambling. And I get it. I've seen people get affected by it. They've had family members, loved ones. For young men in particular that feel like they have no economic mobility, they'll spend their last dollar on a sports game. And obviously, more likely than not, you're going to lose if you're not an amazing sports analyst. And even if you are, the house usually has an advantage. And prediction markets are a little bit different because there's not a house, but still, like if you bet on this team and the team loses, boom, you lost your money. Whereas on a stock, you could bet on a stock going into earnings and the stock could go down, but you didn't lose all your money because if the stock didn't go to zero, at least, you'll be able to maybe recover. So yeah, I think the cultural bias around it is not the best. I think Hood can make it really simple. Just take it off in the app. Like the people that don't want it. Now, obviously, it's going to be hard for them to get new users if they do that to try the product, but I've just seen a lot more people get upset about it. And I don't think you want that many people feeling that annoyed that their brokerage is offering those services. All right, what else? What else do we have? I mean, when you open positions such as you did in AMD, you don't go all in, right? You just start a position and keep adding. Correct. Unless the price is like dirt cheap. Like if you're allocating, all right, I'm going to buy 100 shares of AMD. Usually you start off with like 10 or 20, right? And then you slowly get back in, even if you have to average up and you build a position. But if you think, 196 was the bottom, which I think it was on AMD, at least in the short term, then it's also not crazy to just buy all 100 right there. It's just obviously you run the risk of it going 186. They got to 187. Goodness gracious. Thursday last week, dude, it was crazy. Interactive Brokers expands crypto's future offering with Coinbase derivatives. As we're talking about gambling, IBKR is like, yep, 50x leverage, baby. Let's do it. You know when what's his name? Brian Armstrong tweeted that we're bringing 50x leverage to Coinbase perpetual futures. That was very close to the top when he tweeted that shit. And everyone under that tweet. This was literally September 3rd. I think the top was around October, so it was close. This was when shit hit the fan. We just bumped up max leverage from 20x to 50x on futures. A bunch of traders asked for this update. Let us know what else we can do. I have never levered up on something 20 to 50x. And in crypto, it's crazy because your liquidation level is very close. Like you have, there's usually a 5 to 10% buffer before you get liquidated because you're on so much leverage. So like you literally have to be right about the direction. And if you're not, you lose. Especially when you're on that much leverage. But I feel like that's what caused the deleveraging in October. Like there was too much leverage. Rivian's up 5%. Okay, Rivian catching a bid, 4.8. You levered up 10x on Palantir and Hood calls, but yeah, I mean I did lever up on those, but you know, those were a little bit more. I had a year and a half. Like there was a company that was producing cash flows. Like there was a path to seeing that leverage play out. With Bitcoin, I mean, like you gotta hope it goes up, or if you're short, hope it goes down. Ford does have earnings today. That's correct. Ford's actually been a great stock this year. 1369. I think it's up like 20% or 10% this year. No, never mind. What am I saying? It's up 3%. From the lows, though, in November, it's up. Yeah, over the past year, it's up 48%. Okay, so from those $9 lows back in October, it's up a lot more. Palantir 144. Micron, she's trying to go green. Still down. Again, Disney offering more bonds. Marriott had earnings today. That's a hotel. The LA meetup is actually going to be inside of a Marriott. The link again is in the description for those that want to check it out. 8% up on Marriott, 359. Looks like they had some pretty decent earnings. You know, Airbnb has earnings this week, and Airbnb has been a disaster of a tech stock. I mean, an absolute disaster. And as I've started traveling more, I've realized that I'm just going to stay in a hotel. I feel like there was this like mystique around staying in an Airbnb. And in reality, if you're not with like 7 to 10 friends in like some really cool tropical location, like an Airbnb sucks. Like a hotel is just better. And honestly, it's probably cheaper. And you don't have to clean because they clean for you. Like, really, Airbnbs are like, this stock has just not done anything for years, even though their free cash flow has been great. Brian Chesky has not been able to get people to be excited about this story. There's so many alternatives now too. Yeah, that's also fair. A bunch of rules and fees. I mean, every time I've stayed at Airbnb, I just ask myself, dude, even if I had to pay a little bit more, which I probably wouldn't have to, I'd rather just be at a hotel, even if the hotel is not amazing. Clarity Act. I don't think, Jack, Cactus, do you think we have Clarity Act today? I think it's tomorrow. On semiconductor, by the way, it was down. Now it's up 2%. If it is today, then that could be also a little bit of a tailwind for crypto as well. It's a meeting today? Okay, so we don't get an actual vote today, but they have a meeting at 1 p.m., right? Okay, at the White House. Airbnb in the USA is crazy unless it's a mansion. I agree. Mick, can you welcome Emily to the channel? She's a new listener and wants to learn. Emily, thank you for being here. I guess you are a friend of Kevin. And thanks for being part of the channel. Spotify going to the moon right here. Absolutely. Look at this, 17% on the day as this one's not stopping. Is Armstrong going to be there at this meeting? Because he's the whole reason this Clarity Act is taking a while to get approved. Coinbase 164. This thing was like 270 a while ago, back in November. So I would imagine they need to appease him with this whole bank stablecoin yield issue. HIMS, are we still below 19? HIMS, we are below 19, 1850. Yes, Grab earnings tomorrow. But Grab's going to be at the end of the day. It's going to be like 7, 8 p.m. So it's not going to happen after the bell. Meeting news could still bump it with good press. That's fair. Bitcoin, a little recovery, 67.9 to almost 69 right here. 2:30 p.m. White House meeting, execs from JP Morgan, Bank of America, Wells Fargo, Coinbase. All right. So hopefully that gives us a little bit of progress. Chris Camillo continues to be pretty bullish on Hood. This is still a top holding for him. Recent crypto and tech crash near a clear negative 8 for AUM growth and revenue when Hood reports today. Could get ugly. None of it changes the long-term growth trajectory. Yeah, their AUM is definitely going to take a bit of a hit. I don't think it's going to be at 330 billion anymore. Now, granted, they're reporting for December, so the big crypto hit happened in January, so that might help them. But again, I think the max pain today, and I hope I don't have to eat my words on this. I think max pain is around 78, 80 bucks, which would be about a 10% decline from here. I just don't think it's going back to 72, 73. Like, I really don't think it gets hit that bad. I feel like that was a market bottom more than a Hood bottom, and everything bottomed at the same time. Mr. Beast did buy a bank yesterday. We talked about that. I don't really think that's competition for Hood, to be honest, or SoFi. But he bought a bank for Gen Z kids. And I mean, he said the idea is to help them learn how to build credit and invest and all that stuff. I mean, look, maybe that's why BM&R made the investment. They see an Ethereum collaboration with all the users that Mr. Beast has access to. But time will tell if that actually ends up becoming something productive. Financial services, though, are a lot more profitable than chocolate. So it makes sense that he's doing that. Also, Harvey, the legal AI company, raising at $11 billion market cap, $200 million. They're doing $190 million in ARR. Again, the AI companies that are working are growing like crazy. Like, these guys were doing 12 million in ARR a year ago. I mean, the growth is just unbelievable. And it's basically a legal LLM with 100,000 lawyers that are now using it. Lutnick says, we don't aim to stand in the way of American chip demand. He refrained from specific answer on China chip licenses when asked. Okay. Let's see what else we can pull up right here. Okay, so Lutnick is still talking right now. I don't know if we have. Oh, we do have live feed on that. Okay, let me pull this up.
Untoward about that in 2012.
So Lutnick saying that nothing inappropriate happened while he was on Jeffrey Epstein's island. Democrats pressing Lutnick, though, said they were concerned that Lutnick had misadvised the American people on exactly what his relationship was with Jeffrey Epstein in his public comments before those Epstein files became public last week, guys. Back over to you.
Yeah, he's also slated to meet with the Japanese trade minister. That big $550 billion promise of investment appears to be delayed somewhat, and I think the administration's trying to light a fire under the Japanese. We'll talk more about that later. Eamon Javers. Still to come this morning, why Evercore still sees more market strength ahead, despite some growing AI debt concerns.
All right, so I guess that's the extent we have from Lutnick right here. Oh, hold on. We have another clip. He's not just getting grilled on the Epstein stuff. You got a lot of people trying to get answers out of him on a variety of different topics.
The Census Bureau is under your jurisdiction, is it not?
Yes, it is.
And the Census Bureau is in charge of defining what it means to be poor or in poverty in America. Is that correct?
I think it does economic analysis for America.
But it also defines poverty level, does it not?
I don't know if it's the defining.
Well, you need to
Bureau.
look, because it does.
Okay.
If you know, this isn't a quiz, if you know, what's the percentage of Americans who live at or below the poverty level?
I don't know the percentage.
Okay, it's around 11%. It's been constant. Mr. Secretary of the Census Bureau.
All right. I guess Lutnick's getting hit from a lot of different angles today. It is very performative. I mean, it's performative whether it's a Democrat or a Republican. A lot of stuff never really happens through all this. This is really the opportunity for politicians to make a name for themselves, because if they can get a viral moment, that's how they can build their brand in these situations. Doesn't really lead to too much. Google still down 319. SMCI caught a little bit of a bid today, up 2%. This one did have good earnings. They beat by $2 billion. I mean, every company, whether it's up or down in the semiconductor space, even on semiconductor up 3, they're signaling NVIDIA is going to absolutely demolish earnings. Let's actually do this. I don't think I've done this poll in a while. Let's do this poll in the chat. Let's see. Okay, here's the question. Do you own NVIDIA? Simple question. Do you even own $1 worth of NVIDIA? I'm going to guess, before looking at the poll, I'm going to guess 60% of people here are long NVIDIA. So I feel like all of us, and I mean, if you're long the S&P, you're basically long. Nice 8.5% of NVIDIA here. Tesla also trying to break 425. 67, 68%. All right, so about 70-30. So a decent chunk of us are looking for this thing to go higher. It is quite an incredible market, right? Where this one company, now, although it's different this year, we've had more breadth expansion, but this one company really is the determining factor on where the market goes. It's kind of crazy. I mean, I don't think we've had a market where it was like this one company determines everything. But then again, this one company is the basis for AI. So the reason AI is happening. And Jensen continues to blow away the expectations. Snowflake right there, that's up 4%. Figma up 9% on the day as well. The 30% that don't own NVIDIA own AMD. Yeah, basically. I mean, most people have exposure to something in this AI revolution. PayPal broke 42, baby. There you go. Nice little 2% move on Mr. PayPal. Yeah, I mean the stock, not the ETF. It's 26% of my portfolio, 10% of my portfolio. SG says, my birthday. Happy birthday to you, SG. Thank you for being here and being part of the channel. Yeah, I mean, and see, I don't think it's just retail, but obviously NVIDIA still is a big retail name. Let's look at the options that were traded yesterday. Overall, okay, this updated today, but I mean, NVIDIA and Tesla, always number 1 and 2 every day. So far in the first hour, the market has traded 325,000 NVIDIA options, 304,000 Tesla options. Then you have Netflix at number 3. Then you have AMD, Google, Microsoft, Micron's up there, Palantir, Amazon, Google, Wolf, Hood, Apple, Datadog, GameStop, Strategy, Intel, Meta, Hims, and Oracle. These are your top 20 stocks that have been traded today. Google secures unconditional EU antitrust approval for $32 billion acquisition of Wiz. Okay, that's good because Google has tried to buy these guys for the past year now. Yeah, boom, there you go. Maybe that's why the stock's down today, because they're about to dish out $32 billion to buy a cybersecurity company. But at least they got the approval now to make that happen. Why is Tesla moving? I don't see any news on Tesla. Although, again, Elon kind of pivoted the entire Tesla thesis yesterday, or at least space thesis, from Mars to the moon. And he's now very serious about building a self-sustaining city on the moon before they go to Mars. I think Tesla continues to pump off the idea that maybe, just maybe, that SpaceX merger happens, which again would be super cool. But got to see if it actually comes through. 424.50, that's up 1.7. Goog's still down, Nvidia's still down, Hoodie, new high of days, Amazon as well. 212, there you go. 196 to 212. Still has made a move from earnings. Green on the day. What do you think about your BM&R position right now? I think hopefully crypto has bottomed. Again, it's crazy to say that because it's only February and you don't think we get a bottom that quickly into the year. But man, it was like a $20,000 candle we experienced last week, not all at once. But we basically went from 80 to 60 in a couple of days. And it's like, I don't know, like, yeah, we could obviously go back there, but if that was it, then even if Bitcoin and Ethereum are flat for the coming months, MicroStrategy and BM&R are probably flat as well. Again, Ethereum went to 1750. So I think these things maybe stable out. And again, I think Kevin Warsh, although he's bearish for gold and silver, that might not be the most bearish for crypto. Because if money just leaves gold and silver, you have a little bit more money that's out there to speculate. Now, granted, quantitative tightening in general is bearish for risk-on assets. But right now, can we say this is crypto winter? Can we say we're in crypto? I mean, Bitcoin 120 to 60. No, 127 to 60, right? That's not the worst drawdown Bitcoin's at, but is that enough to qualify for us being in a winter? I think kind of the fact that we touched 60 definitely feels like we're in the winter right now. And if this is the extent of the winter that we have to deal with for the rest of the year before we get out of it, I don't hate that. Yes, it's definitely a winter. It's not winter until it trades sideways. What do you think about Hood earnings? Again, we already talked about it. I think they will crush. I have no idea what the stock's going to do simply because it's run up a lot from the absolute lows, but I also think the absolute lows don't need to be breached again. So realistically, like I think 90 is your upside. And then I think your downside's like 78 at the lows. I don't know if we blast to 100. If we do, I'll be very happy. But I also don't really think we get hit that bad like we did last week. But earnings, they're going to beat. EPS, they're going to beat. Revenue, they're going to beat. Grab right there, up 3%, 440. MAUs, they're going to beat. Credit card, banking, all that stuff's going to be at all-time highs. So, I mean, there shouldn't be a negative reaction to the print, given the stock's down 40%. SoFi, by the way, almost 22. Almost 22. What else do we have? What else do we have? I think these are most of our headlines. I'll check resistance for SoFi at 22. See if we can break there. Previous drawdowns have been 70% or more from the peak. Yeah, this one is like 44%. So it's not as aggressive as the few that we had a couple years ago. We did not have the 13F filings yet. Hopefully next week we will be seeing those. We got Julian Emmanuel from Evercore. To his thoughts, I believe he had a 8,000 target on the S&P a couple months ago. Here's what he has to say.
Joins us here at Post 9. Talk about how this year has kicked off. I wonder if you're impressed with the ability of other parts of the market to make up for tech drawdowns.
It's definitely a positive. And coming into this year, in a year which we expected there to be a lot of volatility, the flip side of that is volatility is opportunity. And what you typically see to start a new year is the laggards leading. And that's what we're seeing. But frankly, given all the angst around tech valuations, around software in particular, the action as a whole is positive. And even more positive is that we're seeing the stabilization in software.
Do you think old economy growth names are overstating the growth we'll actually get?
It's entirely possible. Some of the valuations in the industrials are very, very high. But again, the message for the market as a whole is if you're going to get that 2.5% growth, and that is our forecast, then everything is really just fine in an environment where we know there's stimulus coming down the pike in terms of the tax rebates from the One Big Beautiful Bill, and more Fed rate cuts coming.
The 100-year bond offering from Google, you see that as some sort of marker of where we are?
So it's very interesting in that respect. And let's face it, the market is digesting this all rather effectively. And the message for us, if you look at the last time, there's a lot of resonance with the late 1990s. The last similar such bond offering was 1997. And the NASDAQ rose 400% between that time in 1997 to the peak in Y2K.
And then it crashed.
Wait, well, who did that bond offering? Do you remember?
Motorola, right?
Was it? No.
It's Motorola 97.
Was it Motorola?
Yeah.
Oh, look,
yeah.
Good job. Digesting what, though? You just said digesting this. What do you mean?
Digesting the angst around technology coming into this year. And very often we feel more comfortable being contrarian. It was shocking to us that at the start of the year, the contrarian viewpoint was that tech could continue to work.
Yeah, although it didn't work last week if you own any software company.
No, but
And
again,
it hasn't worked all year.
So at the degree, if you look at it, the NASDAQ has really been marking time sideways, churn in between stocks, the memory stocks on fire, the software stocks tanking. What our work has found is that sometimes when you have a series of crashes like you've had in gold and silver and Bitcoin and software stocks, the leadership, once the stability emerges, tends to be in some of the things that have been out of favor, which is why in our mind, this is a very opportune time to be a patient buyer of software in particular.
So you think it is a time to actually step in?
We do.
I mean, you said stabilization. It's been a day, a day. So that's enough?
A day and an hour.
A day and an hour, yeah.
But also, a lot of people read that the bond offering and now I'm going back and seeing the Motorola. Yes, times were good after that until, Nokia came and then, it all kind of fell apart.
Well, and look, there could be some point in the future when it's going to fall apart, okay? But when we look at the broader backdrop, the probability of recession is low. The Fed is on our side. There's going to be stimulus. The market's telling you the last month that, if anything, the FOMO's been in gold and silver. That's been wiped away. And
wait, what's been wiped away?
The FOMO around gold and silver.
Gold's up 17%. It's
about 5K
for the year.
Again, look at where it was several weeks ago. Silver in particular, you hit $120. You're down a third since then.
It's not going straight up anymore.
No, exactly.
Gold's up 11% for the month. I know silver's gotten hit.
Yeah,
it's down 1% right now.
All right, yeah, but
not to mention Bitcoin, of course.
Bitcoin is different. Yeah, I mean, but all right. So, do you want to own any Bitcoin or gold or silver? You don't want to own any of those.
We think for commodities and commodity type themes, there tends to be just sort of a sideways healing process. So we think the best thing that could happen is that both bulls and bears in gold, silver, and Bitcoin get frustrated. And then at some point they will rally again. But that point is later in our mind, after investors fully re-engage with the technology theme.
Are you worried about any sort of trade surprises, or you think the market can deal with that now? Because, we are renegotiating USMCA from a posture that's a little more challenging with Canada here. and some of the ratification of these deals. It looks tricky, and we could see new tariffs.
Well, look, to not think that there are going to be trade surprises and surprises of all sorts would be a serious mistake, because that has been the pattern of the last year. But the market has shown an increasing ability against the backdrop of all of this liquidity to be able to digest those. We're going to find out about the IEPA ruling at some point. I'm sure that will be a destabilization of a day or two, and then the market is likely to take it in stride as it has.
Finally, savings rate has come down. Sentiment's lousy. Retail sales today were a goose egg. You think consumption is at risk? All the tax refund story aside?
So this is a bit more of a challenge. There was likely some hesitation on the part of the customer, the consumer, perhaps with the notion that there would be a bump later on. But frankly, it actually isn't a surprise to us, and which is why the market is taking these retail sales numbers as well as it is. Our proprietary Christmas tree survey that we've done every year for the past 20 years showed the weakest year-on-year sales gain in over a decade. And there is some correlation there. So really isn't a surprise.
Right, that the caution's kind of baked in for now.
Yeah.
Julian, so many interesting storylines, and we're just getting started.
Right.
I mean, look, I think his overall points make a lot of sense. He continues to be bullish. Evercore has been pretty bullish as well. The AI CapEx theme, along with the Fed dovish theme, it's just hard to fade that. And I think a lot of these strategists have not really reduced their price targets on the broader S&P because they know that those two things coming together, along with the velocity of buying that we saw last week on the slightest of dips. I mean, the S&P was down 2%, which is a dip, but it's not even 5%. It's enough for money to continue entering into the market. By the way, Palantir just got $1 billion extension with Airbus. 10 years, $1 billion for Skywise. For those that don't know what Skywise is, it was one of the first operating systems that Palantir built for the airline industry. And exclusively, they built it for Airbus. And it's essentially connected all their vendors, distributors, and other parts of the ecosystem together to allow Airbus to operate in the way that they do. Skywise enables more than 150 airlines worldwide to leverage data related to their operations in order to reduce costs and increase the availability of their fleets. Palantir, through its executive VP, Josh Harris, welcomed the extension of the partnership for 10 years. Contract is worth nearly $1 billion. This is the stuff you want to see. More industries, more operating systems within those industries, very sticky software that's hard to replace. It results in revenue that's going to be constant for Palantir, reoccurring, and that helps them expand on their margins. Palantir at their 143.69 on the day. What else do we have? This is a prelude to Skynet. Could Trump back out of the Warsh appointment? Theoretically, he could. I don't think he will. I think he wants Warsh. I mean, dude, he had a lot of time to pick who he wanted. He ended up going with Warsh. For whatever reason, he likes Warsh. Spotify up now 19%. The Chinese yuan has strengthened to 691 against the dollar, strongest since May of 23. So you're seeing the dollar continue to weaken against other currencies. Yeah, technically he didn't appoint Warsh yet. He just made a Truth Social post about it. There's still a long logistical procedure he has to go through to actually formally confirm the guy. But you do have Warsh, who has pseudo been nominated. Expected move on Grab earnings is 5%. Expected move for Hood, I believe, is 9%, if I'm not wrong. So Grab, though, I mean, it tends, like, historically, the move has not really happened on earnings. It happens a couple weeks after, up or down. Hood tends to happen on it. Now, last quarter, Hood was flat. It was up it was down 1.3. I think it was stuck at like 125 or something. No, it was at 109. It was, and then 2 weeks later, then it gapped up to 130. So, I mean, I'm not sure if that move is definitely going to happen on both of those names. Do you own SoFi? Yes, I own SoFi. We do not. When I have a date for the guys, you got to remember, the Ondas CEO is a busy dude. Like he's traveling. I think he was in Singapore last week. The guy is traveling a lot. He's a public CEO. When I have a date for the interview, I will let you guys know. I mean, I'm only doing the interview because you guys want, like, I don't own the stock. So you guys really want it. That's why I want to do it. But when I have a date, I will let you know. But he's a busy guy. I'm hoping in the next couple of weeks. But we got to see if we can do it by the end of this month. Where is Ondas today? Is this one up? Ondas 1006, down 2.7. Karp did endorse Warsh. Again, Warsh interviewed Karp back in January of 22, which is kind of cool. I mean, he's known Karp for a long time, which is kind of cool that they've been together. Supreme Court did not make a ruling on the Trump case. I don't know if that's ever going to happen. Wiz is a cybersecurity company that Google acquired. When he brings, I actually talked to Tom Lee's people. So he's traveling, but April, he's going to be a lot more free. So I think we will have Tom Lee on in about 2 months, but he's traveling a lot the next month and a half. So we should have Mr. Lee back, hopefully in April. That'll be fun. But yeah, we should get him back again. Google right there, 318. That's down 2. What else? I mean, everything's relatively flat to green. You have some stocks that are down. Overall S&P holding on, 695. Norges Bank bought 32 million shares of Grab. Dude, the institutional holdings on this thing are still like they're above 80%, which is why the price action is so annoying. It's at 82.6%. Like the toots aren't selling. Maybe some of them are, but this price action has just been so annoying. And I mean, we need a good earnings to break through. We need Grab to say we are going to guide for some pretty damn good growth. My fear is that they sandbag too hard. And then, the street's like, all right, well, we'll believe the numbers when we see it. And if that's the case, it just becomes an opportunity cost at that point because there's a lot of other things that are growing quick. But obviously, if you're just straight up long and you don't care, then, it becomes a hold. I mean, if nothing changes with the investment thesis fundamentally outside of the price not going up, it doesn't have to become a sell unless you're worried about the opportunity cost, which I understand why people would be worried about that. But if they can, what I realized, bro? As a public CEO, you have one job. You have literally one job. Make the stock go up. That's it. That's really all. Like, literally, no one cares about anything else other than making the stock go higher. If you can make the freaking stock go higher, that's all that matters. That's it. You will shut everybody up. You will calm everybody down. Just make the stock go up. And again, it's not easy. This is why Karp gets a premium. Vlad gets a premium. Literally Noto on Tanner's pod was like, we are going to start putting out our own price targets of our stock because we can't believe the analysts are valuing our company like this. Vlad and Karp don't have to do that because they get the premium on their stock, but for a lot of different reasons. But I also think is because they know how to get people to buy the damn stock. They know how to communicate. They know how to paint a story and a picture. Vlad was pretty smart talking to retail back when the stock was 20 and reshaping his image. Karp is always basically, when he's talking, it feels like he's talking to you, in particular, even though he's talking to a general audience because of his communication style. If we're going to be honest, Noto never really had that flair or excitement to it, right? Now, that doesn't mean the stock should be this depressed, but as a CEO, obviously you got to deliver the growth, right? If you're a fancy talker, that's not going to get the stock to go up by itself, but it'll definitely get you a premium. It'll get people to believe when they shouldn't believe. Like Palantir at 6, no one should have technically believed. There's nothing to really believe in unless you really understood the company. But Karp was there. You could believe in Karp. So, yeah, Alex Chriss did not inspire people to buy PayPal. He said we're going to shock the world, and he didn't do shit. So it's like, yes, there's an execution layer towards being a CEO, but at its core, your job is to make people buy the freaking stock. And if you can't do that, I think you're essentially failing as a CEO. Now, maybe it takes time, but then you have to ask yourself how many people have the time to wait. And maybe some people have a really good trajectory, right? Warren Buffett had plenty of time. He loves waiting years when the stock does nothing. Unless you have those types of investors, the stock's going to stay stuck. But retail in particular, if we don't see a trajectory for the stock moving up, there's just so many other options, right? And money can go in so many different areas. Yeah, look, Tom Lee is a great communicator and he got a lot of people to buy into BMNR. I just think he wasted a lot of his political capital. And I guess I should say brand capital, right? Tom Lee's built like one of the most pristine brands in finance on BMNR. And unfortunately, he didn't see ETH was going to fall by 50%. I mean, realistically, Tom could have pitched anything, dude. A SPAC. Everyone who loves Tom was probably going to buy into whatever he was pitching. He ended up choosing crypto, and it just ended up being one of the most volatile moves because he did it literally right before the thing collapsed, and unfortunately didn't end up working out in the short term. But he has the brand, he has the communication ability, he has the trust, and I think you need all that as a public CEO. I mean, this is why a lot of these public CEOs try to interact with retail a lot more. I mean, you're seeing this. The fact that even the Ondas CEO wants to come on my show, like, he understands, like, you have to talk to the retail audience. You can't just talk to Bloomberg to be able to get people to be interested enough to even look into the stock. And his stock has done really well, right? 50 cents to $10. I mean, if you're taking a chance on it, you've done very well on this. And he probably wants to keep that momentum going. So there's like business execution, but there's also like communication at scale. Blue Owl co-CEO speaks at the Bank of America conference, working on data center deals up to $50 billion. Wow. Goodness, dude. Blue Owl is levering up heavy on these data centers. That stock year to date is down 15%. What if ETH rips? Yeah, I don't think the BMNR story is done by any sense of the imagination at all. I don't think the Ethereum story is done. I don't think the crypto story is done. It's just the timing sucked. And it's like, it's also like, do you blame someone for getting the timing wrong? Not really, but it's also like, if retail was the majority of the buyers, retail is obviously going to be pretty pissed. So I think the BMNR story has a long trajectory. It's just, if he introduced BMNR now, I mean, the amount of money he'd be able to raise and get Ethereum at such a great price, it's just he did it at 4,000. And it kind of makes sense, right? Because at 4,000, when it's like nearing the top, that's when most people would even be interested in something like that. So maybe if he did it today, the animal spirits wouldn't be high enough for the crypto spirits, but I think his brand would supersede that and he would get people to believe in it. And he would have, much better average. Nobody would buy now. See, I don't know if nobody would buy now. Definitely not as many people as that bought originally, for sure. But I think if his brand stayed as pristine as it was, and he didn't have this whole BMNR baggage on it, and he started it today, I think a lot of people would still potentially get into it. Yeah, and it didn't help that his strategist literally said it was going to 1,800, and Tom was like, "Yeah, I disagree with my own strategist." Like, that shit didn't help, bro. That just obviously pissed off a lot of people. Intel, that's down 4%. Intel getting a hit. Yeah, he did it around June. I think ETH was like, what was ETH around June? 3,500? Let's see. It's on its trajectory higher. Around June, we're basically at 27, and then by July, we had gone to 37. So who knows? One could argue that this entire move was BMNR pumping it, and then 5,000 around August, and that's when it started to get hit. So basically started 700 points above, took it 2,000 points above, then 3,000 points, and then you got hit. Dude, and the thing about this is it's not just retail that got duped by BM&R buying it early. SBET, okay, Devin Ryan, who, by the way, just put out a $30 price target on SoFi. He has not put out a price target for a year. He finally, over the weekend, put out a $31 price target. He has a $50 target on SBET. Devin Ryan is someone I have a lot of respect for. He's one of the only fintech guys, like when I get his reports, I actually read them. And back in October, when BM&R was making a move, he picked SBET. But it's not like he picked SBET because he loves SharpLink. It's because he really bought into that entire thesis that Ethereum is going to be converging from a stablecoin tokenization perspective in this new Wall Street meets crypto financial universe. And that's why he said 50 on SBET is not crazy. Now, obviously, SBET has been hit pretty badly, so has been BM&R, but it's not just retail that bought into the idea that Ethereum is going to be the financial future. A lot of the Wall Street guys that I respect also believed in it. It's just everyone got the timing wrong in October. And now it's more of a waiting game than anything. Jason says it could hit 1,800 again. Yeah, but it hit below 1,800, which is why I kind of feel like that is your bounce. But time will tell. What else? Is that pretty much what we got today? Got the Blue Owl headline. Talked about the Google Wiz stuff. Talked about Lutnick. Lutnick said NVIDIA in China must adhere to H200 chip license terms. Lutnick says we could reasonably grow 6% in Q1 GDP. Dude, if we grow 6%, that'd be crazy. American optimism hit a record low. Are you covering Hood today? Yes, we'll be live for Hood today. U.S. adults' optimism about their future life fell to 59.2%, the lowest in 20 years. Declines were steepest among Democrats and Hispanic adults in 2025, while Republicans' outlook remained stable. Current life satisfaction also fell, though less sharply. Overall, only 48% of Americans are now considered thriving, driven largely by pessimism about the next 5 years. Okay. American adults more pessimistic than ever. This chart decline is consistent with the drinking decline we've seen for U.S. adults as well, which kind of you would think if pessimism is getting new highs that drinking would also go up there, but you are seeing a lot of people kind of give up drinking, maybe as a form of trying to find some hope and optimism, even if pessimism is higher than that. Like really, I mean, just you even saw it in Constellation's earnings. Like you're not seeing alcohol sales at all reach levels that we had even 5 years ago. S&P right there, 695.60 on the day. Now, at the same time, you also have, fentanyl addiction and these type of drugs that have obviously hit new highs. 69,254 on crypto. It's also a waste of money. Yeah, I mean, look, whenever, my understanding of drinking is when you're with friends and you're doing it socially, it's a fun thing to do. But that's like when you're with your friends and you're going out or something and you want to get a little buzzed. But just by yourself at home drinking, I don't know. I feel like sometimes that can signify deeper problems. At that point, it can become a vice for a lot of people. But like a whiskey after work or something is not crazy, it's just the excessiveness of it sometimes. NVIDIA back to 190. That's also green. It's the best during the day. Dude, I don't think I've ever drank during the day. Maybe when I was in college a while ago, but I don't think I've ever poured a drink for myself during the day. I drink alone in the shower crying. I see no problems here. Well, drinking in the shower is the best. Yeah, I mean, like a mimosa at brunch, that's not crazy. Or like a glass of wine, that's not crazy either, but you know what I'm talking about. Like taking 5 shots by yourself, I feel like that's been dying down a lot. Like, I don't know if people really do that. Definitely not Gen Z. That's giving up a lot more on drinking. Now, again, maybe other substances like weed are picking up more momentum, but drinking definitely has slowed down. Wait, 5 shots is bad. Oh my gosh. Barely do a couple shots. I'm such a lightweight. We have some breaking news on the NY Fed. Let's see what they're saying right here.
Debt balance has risen to $18.8 trillion. That's a jump of $191 billion in Q4. Balances are up modestly for all categories: mortgages, credit cards, HELOCs, and auto loans. Overall delinquency rates up a little bit, driven by mortgages and more so by student loan debt. Credit card, auto loan, and HELOC delinquency rates were pretty stable. The picture for those with student loan debt does continue to worsen. Outstanding debt now $1.7 trillion, while 9.6% of balances are 90 days or more delinquent. Got some interesting data this week from New York Fed coming off of yesterday.
Yeah, yesterday it was lower inflation expectations, right. Delinquencies higher. It's something we watch, of course, but a little bit weaker retail sales. What happened, and now, is that there's increasing odds of a Fed rate cut. When Kevin Warsh comes in as the next Fed chair, if he gets confirmed, and so. The data, I would also point to actually the employment cost index, which is kind of an inflationary gauge around wages, which also came in a little bit light today. Still solid wage growth, but not as much as we saw the previous time around. So again, maybe buys them more room to cut.
Yeah, although CPI is right around the corner, and you saw JPM last night looking for 0.4, which would bring you back to a 3% annual rate. They think a lot of factors that suppressed inflation in the fourth quarter are starting to come off. And we've talked about the calendar effect. New year, a lot of companies use that as a chance to hike their rates.
Yes, I mean, that's a big wild card. Yeah. Friday, inflation, tomorrow, jobs, which is strange. For more on the state of the consumer, the health of the economy, implications for your portfolio, let's bring in Neuberger Berman, Private Wealth Managing Director, Holly Newman-Croft. Always a pleasure. Welcome back.
Great to see you both. Thank you.
So there is a lot of economic data coming in and potential catalysts for this market that now sits. I'm looking at the S&P, 0.4 off the high, about 3% on the NASDAQ off the high. What do you do with all the incoming information?
There's been lots of information in the last week. Friday we had the University of Michigan consumer sentiment number hit a 6-month high.
Better, yeah.
Yeah, retail sales today flat, disappointing. We've got some important macro data, as you just said, coming out later this week. I think if we just focus on retail sales, because it's the most timely, what was interesting is the weaker components of the sales number were those areas that were most impacted by tariffs. So electronics, furnishings, cars. They're also discretionary. And when you look at the market performance, it sort of suggests that would be weaker because consumer staples are outperforming consumer discretionary this year, which is, I like that, a broadening out of performance. But I think what we're seeing is a more discerning consumer. They're spending, but they're being more cautious about what they're spending on. And so I think we've got to keep our eye on the consumer. And as you just mentioned, of course, the market is now pricing in 2 cuts this morning after that number up from.
So household debt, $191 billion, up to $18 trillion now, as per the latest New York Fed data, S&P 695. I mean, we got a lot of debt. This is the country that thrives on debt. It's why we are the world's largest consumer as a country. But, that's also a reason why getting these rates down will help with refinancing a lot of that debt. For those that are asking about the LA meetup, I'm putting the link in the chat. It's in the description as well, but there it is right there. You can sign up. And March 28th, you will officially have that LA meetup. Microsoft wants to rewire data centers to have space superconducting cables, which can make for more compact data centers. Okay, more and more updates on this data center build out. Microsoft, again, for anyone doubting the data center build out, these companies are spending $650 billion this year. Like, this is not slowing down. Not slowing down, not even a little. If anything, it's accelerating from last year. I think last year was about $550 billion. So the CapEx expenditure is continues to be pretty strong. JK, thanks for the super chat. You don't have kids. When you do, you will drink alone and cry. Looking forward to it. Jace, thanks for the super chat. Thank you all for what you do, Amit. Glad to see you on the AMD train. I've been buying since $89. I just opened a new position in AUR. I've heard of AUR, and congrats on AMD at 89. I mean, a lot of people that took the leap on that have done very well. Aurora Innovation. Okay, so I've heard of this. They're obviously not profitable. $8 billion company. Definitely a lot more research is warranted on this one, but I know a few people that have been looking into this name as well. This one year to date is up 15% as it started to get a lot more momentum. This one is also in the autonomous driving space for those that don't know. Again, a lot of the AVs have been excited. Palantir just went red. Like, investors have been excited to give them a bid. WeRide, AV Ride, all those companies. Uber had an interview yesterday where the president tried to justify why AVs are not going to commoditize their business. I'll pull that up. And I mean, basically, he was like, the AVs are going to become a commodity. They're not going to become something that is proprietary to Tesla, for example. They're going to become part of this ecosystem, and then Uber is just going to fit into the ecosystem. And, you know, maybe he's right, maybe he's wrong, but at least that's how Uber's thinking. But the street definitely is not giving Uber any love on that idea of autonomous vehicles. Even though if they become the centralized network for them, you know, you would think that they definitely have a chance to get there. Let's see if I can pull that up right here. Yeah, I think this is where he's talking about more of this.
Disruption risk profile from an autonomous perspective, I think, is much more insulated by it from autonomous disruption. You know, autonomous drone delivery and autonomous bot delivery is a thing and will be a thing, but I don't think it's sort of disruptive at its core to the marketplaces like people view autonomous cars to be.
Right.
And then if you take even just our mobility business and slice it into, you know, countries where average fares can support autonomy in the next 5 years versus now.
Everyone has technology that works, and that it seems like that's what you believe will play out. Then it's going to come down to, how do I get a ride fastest? And maybe it's a human, and maybe it's autonomous, and maybe I don't care. I just want a good price, convenience. I want to get to where I'm going. I want the car to be clean, and I want the billing to be simple. And in that world, it's hard for me to picture how you guys don't win, because by bringing on different fleets and different types of autonomous vehicles, it's just expanding choice and capacity in the markets that you operate in. And why would someone opt for an app where there's only one mode and it's not necessarily the most convenient or the fastest? Is that sort of the way you guys are thinking internally about this?
Short answer is yes. And I mean, look, let's ground those same bears in the reality of our business today. Our core human ride-sharing business has very low switching costs, right? You know, this has always been, I think, somewhat of a valid criticism of the ride-sharing industry, and maybe where, you know, some of the folks that thought we would never get to profitability a decade ago got it wrong. Was, yes, there's minimal switching costs. And by the way, that's true on the consumer side as well as the driver side, right? And we see a good share of our drivers work across multiple apps, and that's fine. And we see a good share of our customers who may have a couple of ride-sharing apps downloaded. But ultimately, it's going to matter who gets the first look, who's being open first, and what they're going to care about is the same thing they care about today from the consumer perspective, which is price, reliability, which is generally pickup times, and can I count on it in peak periods?
Right.
Now, again, my only pushback to that is if Tesla doesn't allow their cars to be part of this Uber autonomous aggregated network, and Tesla has 10 million of them on the road, and their costs are significantly cheaper than the Waymo and the Uber, and the experience of a robotaxi is just better than the experience of an autonomous Uber or autonomous Waymo. Like, I don't know if that aggregator thesis necessarily plays out. Now, granted, there's a lot of ifs I just attached to Tesla winning that. But if you're a Tesla bull, you've got to believe all those things happen. And they happen at such a magnificent scale that it becomes impossible for this aggregator thesis to get any type of momentum. If you're an Uber bull, you're probably calling BS on that. And I think that's the divide realistically between Uber and Tesla. Yeah, Lyft also has earnings today as well, which is going to be important about that. What do you think about Snowflake? Okay, so Snowflake is reaccelerating revenues, particularly AI revenues. They're growing 30%. Snowflake is just not the most exciting software name that's out there, either on a valuation perspective or a growth perspective. Growth, I think, is Palantir, but Palantir has a higher valuation. Valuation-wise, I actually think Salesforce is a lot more attractive than Snowflake. Now, granted, Snowflake, their argument around AI is that you have to have all your data secure and structured for the AI to make any sense. So they kind of want to operate as like a major application layer. Salesforce is more on this agentic agent force workflow as the basis for AI. I do think Salesforce, Snowflake trades at 15 times sales. Salesforce trades at 4. And Salesforce is doing a hell of a lot more revenue. Now it's growing a lot less faster. But I don't hate Snowflake here. In general, I think everything in IGV pumps if we get a broad-based software pump. So Snowflake back to 205, Salesforce back to 220 should not be crazy if we see that. But software's got to be in the right direction. Again, Google is down because of that bond sale today. Google 317. And then, I'll look into AUR a bit more in the AV space. Is that pretty much it? Are these most of our headlines? xAI's fourth co-founder left the company, which is kind of weird. I don't know why all these people are leaving xAI. Probably because, if I had to guess, they don't want to be part of SpaceX. And they're probably going to potentially slow down process if they're underneath a bigger company. But you had a lot more people that started to exit. Again, the SpaceX xAI thing makes so much sense. Like, there's no world in which xAI could have survived by itself as an independent. They weren't making any money. They're buying hundreds of thousands of GPUs and they weren't monetizing it. Like, we talked about ChatGPT not making money. xAI did not make money. And if they did, it was a very minimal amount. Just like X barely makes any money. So the acquisition made total, and probably Elon thought years ago, dude, like he'll just buy it out if it can't really scale. Question is, does it add value to the IPO in general? I have a drink every time Steve mentions Costco. Dude, Steve asking Josh Brown about Costco on the pod was hilarious. Because Josh was like, I'll tell you why it's more valuable than NVIDIA on a PE basis. He is right. The reliability of those cash flows on Costco and Walmart and Apple always gives them a little bit more of a premium. If Tesla is full autonomous, they win all markets they compete in, just flood the market with cars, ride price trends to amortize manufacturing costs plus desired margin. Yeah, that's always been the thesis. So the question then becomes, can Tesla actually win autonomous in every market they compete in? And it's like, look, I have FSD and it's amazing. And, the time I used Waymo, it was like an okay experience. But Waymo did 25 million paid trips last year. And they're probably going to do a lot more than that this year. So, Tesla is stuck in a couple cities, still not fully unsupervised. I think it's just a question of how fast can they get it out there and really start to scale. But if their version of FSD is better, I think consumers ultimately will pick what they feel is better. Then you've also got that other thesis that again, how many people are just going to let their Teslas run around their city picking up people? I don't know if I'm going to do that. I'm sorry. I kind of want my car to be my car. And I don't know, for an extra $100 a month, $200 a month, I'm going to go let it drive around the city. I kind of don't think I'm going to do that. And so I also wonder how many people will opt in to just letting their Tesla be a robotaxi. If it makes me like 50 to 20K a year, okay, but you're going to have to live in a really good city. You're going to have, if the prices are coming down, if you're getting, below $1 a mile, I don't know how lucrative it's going to be. And also, it would have to do a lot of trips. And so, I mean, if you bought the Tesla and you never use it, sure. But if you're actually like, you want to go to the gym or you want to go get some groceries, like if you just need it in the middle of the day and it's gone, I don't know. I feel like that would be annoying. But then again, there's probably other people that would just let it go through. Yeah, that's the other thing. That's a great point by Austin. America is a low trust society. This term, I was introduced to this term by Amir, who now lives in Japan. Japan is a very high trust society. I mean, he was telling me, because his wife is Japanese, like you could leave your phone in a Starbucks, come back the next day, and the phone would still be there. Like that's the level of trust that exists in some of these countries. That's not in the, dude, you leave your phone in a Starbucks in New York, that phone is gone. You're not getting that back. So, I mean, to just let people be in the car, it's a little different. Yes, exactly. Same for Singapore. That is correct. By the way, I'll have updates on the Singapore meetup probably on Monday. We're finalizing some stuff this weekend, but should have some updates next Monday. In America, you leave your phone at Starbucks, you get stabbed. Okay. Maybe that's the UK. Or bring up stabbing and stuff. But yeah, it's just not a high trust society. It's just not a high trust society the way some other places are. Is Singapore meetup dependent on Grab earnings? Dude, it would definitely be more fun if Grab goes up for Singapore. That would be more fun. All right, are we done? We got a big one after the bell. We got hoodie. It's an important one for me. It is a 7-figure position for my portfolio, so obviously I will be feeling the pain if it goes up. I'll be feeling the pain if it goes down. Actually, I'll be feeling the joy if it goes up, which hopefully it does. But this is a big one for the channel. This was indeed our second album. Third one is still in production. You know, find some extra studio space for the third one, but this one's an important one. So we got to see what we can do. And look, I trust Vlad. I trust Vlad. I don't think he's going to screw us. I think he's going to put up some great numbers. I don't trust Wall Street, but I trust Vlad. If the stock goes down, it is what it is. I don't think the stock goes down because the quarter sucks. I think the stock goes down because the street's going to be the street. And if they took Microsoft down 10% off missing Azure 2%, if they took freaking Amazon down 10% for spending more on CapEx, but re-accelerating AWS, which is the reason they spent more on CapEx, they could take HUD down for any reason. So we just have to be ready for a decline. But I also don't think we're revisiting those lows. So hopefully we're going to be all right. And if we do, I mean, if we get a chance to buy it at 70 again with a PE that'd be below 30, then we'll have to decide what happens there. But hopefully that doesn't play out. All right, word of the day. Let's see what we got. And again, Tanner, Roy, and I will be live later in the day. This will be a Zoom call, so you guys might see me on their Zoom. They're doing it through Zoom this time, so it might be a little bit easier, but that'll be what we got. Word of the day is numinous. Okay, before we say how it's worth, someone tell me I'm saying that wrong. Numinous. Like, someone tell me I'm saying that wrong. There's, like, I don't think I'm saying that wrong. Don't tell me the U and the M is actually a silent G or some nonsense. Like, it's numinous. Having a mystery, awe-inspiring, or almost spiritual quality. There's something numinous about watching a long-term thesis finally play out. Yo, ChatGPT always uses these words in like a stock market context, I think, because that's how I prompted it. And so every time we get a sentence, it has to do with the stock market. But there's something numinous about watching a long-term thesis finally play out. Okay, let's see if I'm saying it right. Numinous.
Numinous.
That's what I'm talking about, baby. That's what I'm talking about. Let's see if we can keep this run going. Numinous. That is what we got. What happened to Schwab? I don't know. What happened to Schwab? Oh, 7% down. Schwab. What happened here? Let's see. Schwab doesn't move like that ever. Schwab. An inside. No, this is from February 5th. Insider sold 100,000 shares. That's old. There's no news, guys. Hood and IBKR aren't moving like that either. Hood is flat. IBKR down 2. Oh, they better not say Hood's next. They better not say Hood's next, bro. Dude, why are all the brokers? What? Hood's close to going red. What, did Anthropic come out with a broker or something now? Like, what is going on here? 7% on Schwab. What is this? Does anyone have a headline? Cactus, if you see anything, let me know. I don't see anything. 7% on Schwab. How much was Schwab up year to date? Year to date, the stock was up. Before the 7% decline, it was up, basically like 8.4%. So basically just lost everything. Now it's down 2% year to date. Hood's going down. Did Trump tweet? That's a good question. What are they doing? Trump did not tweet anything. Hood's also flat. It's not really, Hood's down 1 cent. That's not crazy. Schwab, there's a green candle right there. Dude, is this just a little weird intraday price action or something? Morgan Stanley's down 4%. What? Oh, where's JP Morgan? JP Morgan just went red. What happened to all the banks? Trump had to say something. Bank of America, it has to be Trump. Bank of America just went red. SoFi is probably red. It's not red, but it got a nasty candle right there from 22 to 2180. Citigroup is red by 2%. Wells Fargo, red by 2%. Truist, red by 1/3%. XLF has to be down at least 1%. XLF is down, okay, 0.5%. KRE, Regional Bank ETF, that's down 1%. What did this guy just say about the banks? There's no way this is the Clarity Act. Also, that meeting's at 2:30. Bro, all the financials don't just go up and down like that together. Credit card data. I don't see anything. Where's the dollar? Dollar's at 96.70. That's not the issue. That's weird, bro. They were all up on the day. Financials were doing great today. Robinhood's now going more red. Schwab right back down to 99.40. Silver's falling too. Is it? Hold on. Up. Silver is falling. Down 3%. SLV just went down 4%. Okay, but the algos, there needs to be a trigger for the algos to get upset at all the financials together. Yeah, it's definitely algos, but there's something they're upset about. Schwab down 7%. You don't see that. Dude, Schwab does not move like that. Like, it is not supposed to be a 4 or 5% move up or down. Stablecoin positive developments in Congress, but wouldn't that be good for the banks? Like, the banks have figured out how to make money off stablecoins. Like that, I don't think that's bearish, but also I don't see any headlines on stablecoins. All I see is Visa is working on Ethereum for stablecoins. Is Visa down as well? Visa's green. MasterCard is also green. So, okay, so 2 of the biggest credit card processors are green. The banks are red and the brokerages are red. Is Circle up? Circle is up. Dude, that's really weird. Banks are fighting stablecoin yields because they will lose deposits. Okay, that's fair. But why is... So if we take that line of logic, then if the meeting goes bullish crypto today, bearish the bank's perspective on stablecoins, they all dump at the same... Well, why? I know Schwab is still a bank, but why is that getting hit 7%? Morgan Stanley down 4%. Hood shouldn't be that affected by it unless they're going to lose deposits. Also, that's what the meeting is about today, right? That, like, nothing's been decided. It's 3 hours until the meeting. So for all these stocks to get hit right before the meeting without any actual conclusion to it is a little weird. TD Bank is selling a 10% stake in Schwab. That was announced today at 7 a.m. Okay, so then that should have affected Schwab at 7 a.m., not at 11 a.m. Yeah, I see nothing, guys. I see nothing. I don't have any headlines on this. I mean, look, I don't think a lot of this necessarily affects Hood in a meaningful way. Hood is still rooted in a lot of other types of business, but it is still a financial. Yeah, Block is up. SoFi is up. SoFi is not falling like Morgan Stanley is. Here's what Besant said this morning about crypto.
I think what we're seeing in the crypto market over the past few months means more than ever that the U.S., we need market structure, we need clarity, and we need to get this across the line this spring. We got a few recalcitrant actors who said, well, it'd be better to have no legislation than the legislation we don't want. And I think both on the banks, the other crypto firms are united against them. So we need to get this across the line. The U.S., under President Trump's leadership, the U.S. is becoming the crypto capital of the world with our best practices, best regulation. And for crypto to remain a viable digital asset and move forward, we need to get this Clarity Act done. I think what we're seeing in the...
I mean, also, look, if the government wants this Clarity Act, it might be short-term bearish for the banks, but really? Schwab down 8%? Morgan Stanley down 4%? But also, it's weird. JP Morgan's not really down, but Morgan Stanley is. Like, it's like Interactive's down, but Hood's not. It's like selective. All of them are down, but some of them are down way worse than the others. Citigroup's down 2%, Wells Fargo down 2%. Could just be ETF outflows causing sector sell-off. Yeah, that is possible. It would be pretty random on a Tuesday for everyone to just dump the financials and to dump Schwab in particular. All right. I guess we'll hopefully get some answers throughout the day. We'll be live for Hood earnings. Should be a fun one. We'll see what Vlad can deliver. And yeah, we'll keep going from there. I don't know. That was weird towards the end of the show, but I'm sure we'll probably get some answers throughout the day on exactly how this plays out. All right. So we'll be live for the market close. Tanner, Roy, and I will keep this going. And yeah, hopefully we get a really good earnings from Hoodie and we can get some momentum on this stock going to the upside. We are not doing Technical Tuesday today because we have Hood earnings. Thursday, Jason will be on for like 2 hours. And so we'll at least get some technicals on Thursday. I talked to him last night. He's good for Thursday. But we will not be having TT today. All right. That's it. Thank you, everybody. Appreciate it. I'll be back for the close with Tanner and Roy, and we will keep going from there. Bye, everybody. Have a good one.